translated into durable growth, stronger institutions, deeper capital formation, and inclusive economic opportunity. And that is precisely the purpose for today's summit. But then to officially commence the proceedings, please join me in welcoming the Chief Executive Officer of the Business and Financial Times, ladies and gentlemen, Dr. Godwin Akwe. A round of applause for him as he takes the opening remarks.
Please, Deputy Governor of the Bank of Ghana, representatives of government, members of the financial services industry, development partners, captains of industry, members of the media, ladies and gentlemen, a very good morning. Good morning. It is my singular honor and privilege on behalf of the board, management, and staff of Business and Financial Times to welcome you to the 6th edition of the Money Summit. This year's theme, Building Trust, Capital, and Stability for the Future of Ghana's Economic Growth, could not be more timely. As a nation, we have emerged from one of the most challenging economic periods in our recent history. We have witnessed banking sector reforms, a sovereign debt restructuring program, inflationary pressures, exchange rate volatility, and a crisis of confidence that affected households, businesses, and investors alike. Yet, every crisis also presents an opportunity. Today, Ghana stands at a critical point where the conversation must move beyond recovery towards building a stronger, more resilient, and more inclusive financial ecosystem. Ladies and gentlemen, a strong economy is built on 3 foundations: trust, capital, and stability. Without trust, savings remain under mattresses, some even in polytank and all that. Without capital, businesses cannot expand. Without stability, investors will not commit long-term resources. The challenge before us is therefore not merely how to grow the economy, but how to mobilize domestic capital, deepen financial inclusion, and restore confidence in our institutions. The financial ecosystem of the future must be broader than traditional banking. It must include commodity-backed financing, community banking, digital finance, pension funds, capital markets, and innovative financing mechanisms that unlock the productive potential of our economy. Consider commodity-backed financing. Ghana is blessed with some of the world's most valuable commodities, namely gold, cocoa, oil, and increasingly strategic minerals. Yet for decades, we have exported raw materials while struggling to access affordable financing for production and value addition. The global experience shows that commodity can serve as bankable assets capable of unlocking capital. Indeed, Ghana's cocoa sector has historically relied on structured financing arrangements to support cocoa purchases and exports, demonstrating the power of commodity-backed financing in mobilizing large-scale capital. More recently, financing arrangements in the mining sector, including the Bogoso-Pristia transaction, supported by the international community traders, have illustrated how commodity assets can attract significant investment capital into productive sectors. Imagine what can happen if more smallholder farmers, agribusinesses, and mining enterprises could leverage warehouse receipts, future production contracts, and commodity assets to access affordable financing. This is the conversation Ghana must have. Ladies and gentlemen, the second pillar is community banking. Financial inclusion remains one of the most powerful tools for economic transformation. Today, Ghana's rural and community banking sector serves more than 7.5 million customers, operates through over 500 and 850 branches, and reaches communities that many traditional banks do not serve. In fact, there are currently about 147 rural and community banks spread across the country, supporting farmers, traders, SMEs, and households. The Bank of Ghana recently had some reforms which are transitioning rural banks into community banks, which I think has been done. I intended to strengthen governance, resilience, and financial inclusion. The story here is simple. When people are given access to financial services close to where they live and work, they save more, invest more, and participate more meaningfully in economic development. As the Bank of Ghana has consistently emphasized, these institutions play a critical role in promoting a savings and investment culture across Ghana. The third pillar, that is confidence and investment culture. A nation's capital is not created only by foreign capital or investors. It is also built by ordinary citizens who trust the system enough to save, invest, and build wealth. The greatest economies in the world are built on domestic capital mobilization. The greatest economies in the world are built on domestic capital mobilization. Ghana must therefore cultivate a culture where investing becomes a habit rather than an exception. A culture where young professionals buy investment products, pension funds invest productively, SMEs access patient capital, and households see wealth creation as a long-term journey. As Warren Buffett famously said, trust is like the air we breathe. When it is present, nobody notices. When it's absent, everybody notices. Today, the future we seek must be created through trusted institutions, sound regulation, responsible leadership, and innovative financial solutions. The encouraging news is that Ghana's macroeconomic recovery is beginning to provide a foundation for renewed investment and growth. The governor of the Bank of Ghana recently called for greater deployment of capital into value addition, industrialization, and innovation to drive Ghana's economic transformation. Ladies and gentlemen, this summit has become one of the most important platforms for discussing the future of finance, investment, and economic transformation in Ghana. I therefore encourage all participants to engage actively, challenge assumptions, share ideas, and contribute practical solutions that can help build a stronger financial ecosystem for our country. Before I conclude, allow me to express our deepest appreciation to our sponsors, partners, speakers, and delegates whose support has made this summit possible. A special welcome goes to our distinguished opening speaker, Mrs. Matilda Asante Esiedu. Madam Deputy Governor, we are honored for your presence and look forward to your opening remarks. Ladies and gentlemen, Let us use this summit to reimagine a Ghana that trust is abundant, capital is accessible, and stability is sustained. A Ghana where every cedi saved becomes an investment. A Ghana where every community participates in growth. And a Ghana where finance serves as a catalyst for prosperity for all. Thank you for your presence. May God bless you all, and may God bless our homeland, Ghana. Thank you.
Thank you very much, Dr. Akwe. Let's give him a round of applause once again. Right. Thank you for setting the tone for today's conversation. We move to take remarks from one of our valued partners, ladies and gentlemen. With a round of applause, let's welcome Head, Marketing and Brand at EcoBank Ghana, Madam Regina Ofori. A round of applause for her as she joins us. Please keep clapping.
Madam Deputy Governor, distinguished leaders across banking, pensions, insurance, and capital markets, captains of industry, esteemed partners, ladies and gentlemen, good morning. It's a privilege to address you this morning as we welcome you to the 2026 Money Summit organized by BNFT and headlined by EcoBank Ghana PLC. Let me begin by commending Business and Financial Times for convening this important platform once again. The consistency of this summit speaks to a shared recognition that Ghana's economic future will be shaped not by individual institutions, but by the strength of the ecosystem we build together. So why is EcoBank here again? Last year, we were on this platform, and this year we are back again. EcoBank's decision to return as a headline sponsor for the second consecutive time is both intentional and strategic. We are here because of the theme of this summit, building trust, capital, and stability for Ghana's economic future. Speaking directly to the core of what we do as a bank, and more importantly, the role we believe financial institutions must play at this point in Ghana's journey. At a point when macroeconomic realities have tested confidence across markets, the mandate to us is very clear: to restore and strengthen trust in financial institutions, to mobilize and efficiently allocate capital, and to build a stable, resilient system that can support sustained growth. These are not abstract ideas. They are practical imperatives for us, and they require alignment across banking, pensions, insurance, communities, capital markets, and regulatory. One of the most important takeaways from the most recent economic cycles is this: fragmentation weakens outcomes, coordination strengthens them. This summit is therefore not just another industry gathering, it is a platform for alignment. Alignment between capital providers and capital users, alignment between risk frameworks and growth ambitions, and alignment between policy direction and market execution. As a Pan-African bank, EcoBank operates across multiple markets, and I've seen firsthand how coordinated financial systems are better able to withstand shocks, mobilize investment, and accelerate recovery. At EcoBank, our contribution to this ecosystem is anchored in a very clear strength: our corporate and investment banking franchise. We work at the center of economic activity, supporting large corporates and multinationals, financial institutions, including banks, pensions, insurance firms, rural banks as well, public sector entities, and developmental partners. Our role goes beyond providing capital. We structure transactions, we connect markets, we facilitate trade, and importantly, we enable institutions to scale with confidence and in trust. From syndicated finance and project finance to structured trade solutions, treasury advisory, cross-border liquidity management, We are deeply embedded in the sectors represented in this room. This is why forums like this matter to us, because the conversations here translate directly into the kind of partnerships and financial structures that drive real economic outcomes. One of the most critical opportunities before us is the long-term capital mobilization. Ghana has strong institutional pools of capital, particularly within pensions and insurance. The question is not whether capital exists. The question is how effectively is it being unlocked and deployed. We see a clear opportunity here. Pension funds to play a more active role in infrastructure and long-term financing, insurance firms to deepen risk-sharing frameworks and unlock investment, and banks like EcoBank to bring structuring capability, balance sheet strength, and execution discipline. This is especially relevant as discussions evolve around innovative financing structures, including commodity-backed instruments, which require strong institutional collaboration to scale effectively. EcoBank is well positioned at this intersection, supporting the structuring, risk assessment, and execution of such solutions across markets. So how do we drive stability through scale and integration? Stability, which is central to this summit's theme, cannot be achieved in isolation. It is built through strong institutions, robust regulatory frameworks, and digital innovations, and of course, regional integration, because we are not an island. EcoBank's Pan-African platform enables us to contribute meaningfully here. Through a unified banking infrastructure, we support seamless cross-border trade and payments for businesses and consumers. Regional treasury management that supports all kinds of financing, and scale efficiencies for institutions operating across multiple markets. In an increasingly interconnected world, this kind of integration is essential for building resilient financial systems. So our Accralian call to action today, as we engage over the course of today's session, from discussions on commodity-backed financing to long-term capital mobilization, I would like to leave us with one simple thought. The opportunity ahead of us is not just to discuss the future, but to actively shape it. And that will require greater openness to collaboration, a willingness to innovate beyond traditional models, and a shared commitment to building institutions that are trusted, resilient, and forward-looking. As I close, I want to reiterate how proud EcoBank is to be a part of this journey this morning. Our continued support for this summit reflects our belief that partnership is the foundation of progress, and that together we can build a financial ecosystem that is stronger, more inclusive, and better positioned to support Ghana's long-term growth. I wish all of us a productive and impactful summit. Thank you.
Thank you very much. A round of applause for her. Indeed, fragmentation weakens outcome. Stability cannot be achieved in isolation. A round of applause for her once again. So there's this common saying that beside every successful man is a woman, and also beside every successful woman is a man. So then beside BNFC for a successful man is Summit, it's EcoBank. A round of applause for EcoBank. And also we have on board this year, the Bank of Ghana. A round of applause for the Bank of Ghana. And the Gold Board, Fidelity Bank, and also Stanbic Bank. We're taking our next remark from Fidelity Bank. And with a round of applause, please help me welcome the Deputy Managing Director, Mr. Ataye Boajan, for the opening remarks. Please, a round of applause for him as he joins me.
Thank you very much. Our Deputy Governor, Bank of Ghana, distinguished guests, colleagues from the financial services sector, and friends of Ghana's financial sector, good morning. There's a story I want to tell and share with you. And it starts with a farmer in the northern region of Ghana. She grows food. She works hard. But every year, she faces the same problem. She cannot get a loan from a bank. Not because she's not creditworthy, because by every conventional measure, she looks like a risk. That story is not unique to her. It is the story of millions of Ghanaians. And I would argue that it is also the story of Ghana's economy itself, full of productive capacity and potential, but still not fully connected to the capital that it needs to grow. That is the challenge the theme for this summit puts on the table today: building trust, capital, and stability for Ghana's economic future. Those are not three separate ideas. They are one, and you cannot have any of them without the other two. Where are we? Let us be honest about the moment we are in Ghana. Ghana's recovery from the 2022-2023 macroeconomic crisis has been remarkable, thanks to our Deputy Governor and her team at the Bank of Ghana. Real GDP growth pushed to 6% in the fourth quarter of 2025. Inflation, which was at 23.8% in December 2024, had come down to 5.4% by the end of last year, and further down to 3.4% as of April 2026. And this is well below the central bank's target band. The reserve position has also strengthened meaningfully. As of April 2026, gross international reserves stood at $13.9 billion, enough to cover 5.5 months of imports. That is not a small achievement. That is the result of disciplined policy, structural reform, and frankly, a great deal of sacrifice by ordinary Ghanaians. These numbers represent real progress, but here's what the numbers also tell us. We are not yet where we need to be. The cedi has depreciated by 10% year to date against the dollar. The oil and gas subsector contracted by 23% in 2025. The agricultural sector, despite growing at 6.8% in 2025 and being a major driver of trade surplus, carries a non-performing loan ratio of 54.7% as of February 2026, which means banks are still deeply reluctant to lend into the sector. And inflation is low, but it has started edging up again, with April recording the first uptick in 16 months. We have climbed out of the valley, but we are not yet on the plateau. Now, the trust problem. The thing about trust in finance is that it is not sentimental. It is operational. When a bank does not trust that a loan will be repaid, it does not make the loan. When an investor does not trust the stability of a currency, they price in premium. When a customer needs or does not trust that a bank will be there when they need their money, they keep their money elsewhere. Trust is the mechanism through which capital flows or does not flow. And in Ghana's context, the trust deficit has two phases. The first is structural. We still have too many Ghanaians who are outside the formal financial system, not because they lack economic activity, but because our tools for assessing credit worthiness were built for a different kind of economy. The farmer in the northern region does not have 3 years of audited financial statements. The young woman running a fashion enterprise in Kumasi does not fit the collateral requirements written for a corporate client in Accra. So the system treats them as invisible. The second is historical. In 2017-2018 banking sector cleanup, and then the DDEP in 2022-2023, these left scars. Customers lost savings. Confidence in the financial institutions took a hit that years of strong performance are still working hard to repair. Building trust in this environment is a deliberate project. It requires showing up consistently. It requires making decisions that are good for the long term, even when they are harder in the short term. And it requires investing in the people and systems that make trust visible. The second element in the theme is capital. Capital in a textbook is defined as financial resources deployed for productive use. But in practice, for Ghana's economy to grow the way it must, capital must be something that is more specific. It means credit flowing into agriculture, not just at the headline level, but with the right structures to manage the real risk in that sector. Our trade surplus widened by 26% year on year to $5.28 billion in April 2026, driven largely by export receipts. Total exports hit $11.15 billion, up 20.5% from the same period last year. That performance is anchored in the productive sector, that is agriculture and extractives. But the agricultural sector's non-performing ratio of 54.7%, it's a problem. There's a fundamental mismatch between where our export strength comes from and where credit is going. It means SME financing. The businesses that employ the majority of Ghanaians with products designed for how they actually operate, not how textbook says they should. And it means deploying capital in ways that build the next economy, not just service the current one. Green technology, climate-smart agriculture, creative industries, the sectors that will define Ghana's economic profile in 10 to 15 years are largely unbankable today by conventional criteria. That is a problem we must start solving now. At Fidelity Bank, we have tried to put action behind those words. Through the MasterCard Foundation's Bridge in Agriculture program, we disbursed 66.9 million Ghana cedis last year, financing that created 12,912 new jobs, sustained 11,566 existing ones, and reached 22,247 smallholder farmers. 62.4% of the direct beneficiaries were women. Oh, you want to clap for Fidelity? Through our Green Tech Innovation Challenge, we awarded over 2 million Ghana cedis in grants to entrepreneurs using technology to solve problems in agriculture. In 2025 alone, over 1 million cedis went to 16 climate-smart businesses. These are small numbers relative to the scale of the problem, but they represent a proof of concept that bankable models exist, and they need to be built and scaled. Through the Orange Corners Innovation Fund, which is another initiative of Fidelity Bank, we supported by the Kingdom of the Netherlands, we have disbursed almost 10 million Ghana cedis to over 55 young entrepreneurs across agribusiness, fashion, technology, and the creative industries, creating over 1,000 jobs in the process. And through our Orange Inspire Creative Challenge, we invested almost $1 million in grants and concessionary loans to support Ghana's creative sector, because the creative economy is a real economic asset that has to be systematically supported. Now, the stability imperative. Monetary policy is doing what it should. The MPC has held the benchmark rate at 14% to anchor inflation expectations, even as the temptation exists to cut further. That discipline is right. Lending rates have fallen sharply, and private sector credit is growing. Industry loans and advances reached over 115 billion cedis as of April 2026. That is encouraging, but stability cannot come from monetary policy alone. It comes from banks that are well capitalized and well run. It comes from a non-performing ratio that is improving and moving in the right direction. It comes from reserves that can absorb external shocks. And it comes from a financial sector that is both profitable enough to reinvest and responsible enough to earn continuous trust. Now, what must happen next? And here I proffer 3 practical recommendations for this forum. First, the industry needs a risk-sharing infrastructure for agricultural credit. Government, development finance institutions, and commercial banks must co-design guarantee mechanisms that make agricultural lending viable without forcing banks to absorb disproportionate risk. The sector is too important to Ghana's trade balance and food security to remain effectively locked out of formal credit. Second, we need faster, deeper adoption of alternative credit assessment frameworks. Mobile money data, supply chain data, and digital transaction histories can unlock creditworthiness for millions of Ghanaians who are invisible to the current system. The Fidelity MTN Jumo partnership that has driven our digital lending growth is one example. We need more of these. Third, patient capital must be treated as a strategic asset. Grants, concessionary loans, and blended finance for green and creative enterprises are not charity. They are investments in the sectors that will define Ghana's economic activity in the next decade. The returns may be slower, but they are no less real. Ghana has done something genuinely hard and well. It came back from the edge. That took courage from policymakers, from regulators, from businesses, and from the people. Now the question is what we build with the stability we have earned. Trust does not happen automatically. Capital does not flow to its highest use without the right structures. Stability is not a state. It's a practice earned and maintained every day. And we in Fidelity believe in what this country is building, and we intend to be part of building it. I wish all of us a very fruitful day, and I encourage all participants to be productive in their recommendations so that our great country will be the beneficiary of the outcome of this great initiative. Thank you very much.
Thank you very much. A round of applause for him. And the questions to remain: what do we build with the stability we have gained? Our next speaker, I believe, would give us more insight on that. So, ladies and gentlemen, it's now time for our keynote address, and our speaker needs no introduction, but I'm just going to read a little. She's actually a respected financial sector leader and serves as the second Deputy Governor of the Bank of Ghana. Ladies and gentlemen, let's all be upstanding as we welcome Mrs. Matilda Asante Isiedu, the Deputy Governor of the Bank of Ghana. Please, a round of applause for her.
Good morning. Oh, come on, you can do better. Good morning. All right. Permit me to leverage the existing protocols already established and to thank the BNFT for making this possible and all the partners. Let me also say that it's quite a well-done job to be convening in this room the people who actually move the economy of Ghana. And it's a great privilege for me to share a few thoughts with you this morning. Now, when the invitation to speak for this forum came to my attention, I must confess that I wondered about what to focus my conversation on. I asked myself, what could I speak to this very well accomplished audience about? And the more I reflected on what to focus this conversation on, the more it became clear to me what to speak on. I believe that a summit that brings together under this one roof the leadership in banking, in the financial services ecosystem, in agriculture, and government is not an ordinary assembly. It is, in effect, a gathering of the custodians of Ghana's economic present and its future. So I decided that the only subject worthy for this room is the economy itself, the grounds on which every balance sheet, every harvest, and every budget in this hall ultimately rests. Everything else that we might discuss this morning is peripheral to this one question. Is the Ghanaian economy stable? And will it remain so? The theme chosen for the summit, building trust, capital, and stability for Ghana's economic future, could not be more fitting for the times that we're in currently. Let's consider where we stand. I'm sure the speakers before me have mentioned that through discipline and no small measure of sacrifice, we have secured stability. That is the achievement we have all worked very hard for the past 2 years. But stability that is secured is different from stability that is sustained. And our task now is to see how we maintain this stability through vigilance. Because as I'm sure we're all aware, we're all economic actors and we've been following developments around the world. The shocks have not left us. They linger in the background with geopolitical tensions, rising oil prices, and the ever-present temptation to feel that we have arrived, so we relax. just before we came into the meeting this morning, we're having a conversation amongst ourselves and some of the guests. And one of the things that we highlighted was the increasing cost of energy. Additional 40% more than we budgeted for, that we planned in terms of reserves or accumulation of foreign currency to support that sector. But this is our reality, and we cannot park our vehicles. We cannot shut down electricity. Life has to continue, so we provide for those. It is precisely because of these exigencies that the three words in the theme today, I believe, belong together. We must build trust, so confidence in our institutions outlasts one single shock. We must ensure that businesses, whether they are the largest banks in Ghana to the smallest farms, can access the capital they need to grow. And we must foster stability, on which both trust and capital depend. Please allow me to backtrack a little, because I think it's worth remembering just how far we've come. And the Deputy MD from Fidelity spoke about that. At the end of 2024, we had inflation at 23.8%. As of April this year, it's 3.4%. And like you rightly pointed out, that's just a marginal inching. For 16 consecutive months, we didn't have inflation going up. We're beginning to see that. And again, if you look at the data, this is as a result, largely, of non-food inflation arising out of the energy sector and tariff increases. Food inflation, which inflicts perhaps the biggest impact on ordinary households, has fallen from 28% to as little as 2% over the same period. This has allowed us to also ease the cost of money, which is the focus of our conversation today. The monetary policy rate has come down from 27% to 14%. The benchmark 91-day Treasury bill has fallen from 28% to under 5%. And average lending rates, again something that we discussed this morning, have moved from the regions of 30% and are hovering around 16%. So for every business in this room, I believe this is the difference between credit that strangulates and credit that fosters growth. I mean, if you're doing business and you're borrowing at 30%, that's your interest expense alone. How are you going to pay back effectively? Our external position has been rebuilt in parallel. Gross international reserves have risen from 9 billion to 14 billion and growing, well over the levels we had previously. And this has been led by historically strong gold export receipts. And the emphasis here is on receipts because it is not for lack of export of gold, but now we have control of the receipts, and that has helped. Exchange rate reforms have been managed. Fiscal policy implementation has provided a very solid anchor, and the current account surplus. All of this shows that growth has been beyond expectation. We had budgeted a 5% GDP growth. We did 6% in the end. And all of this sum up to the fact that the economy is well, doing well, and continues to do well. Stabilization of this kind, though, would have taken many years, and that we have managed to achieve this in a short time, I believe speak to our resolve and the institutional capacity we have as a country. But ladies and gentlemen, let's not kid ourselves, and let's be candid with ourselves. The numbers, however good they are fragile if they are not anchored. And this is where our transition with the International Monetary Fund matters. As I'm sure you've all followed the news and are aware, we have all but concluded the Extended Credit Facility Program. The IMF itself assessed the program to have delivered substantial gains. We're now transitioning to what we call the Policy Coordinating Instruments. And please permit me to just talk briefly about that. The PCI engagement just means that we're no longer borrowing, but it's about monitoring our own reforms as a country. Our credibility now rests entirely on the quality and consistency of our policies. In that sense, then, the policy coordination instrument reflects the locking in of institutional stability. It commits us, not behind closed doors, but in the open, to the discipline that delivered these gains, and raises the cost ever so high for us if we dare to abandon that discipline. And this is precisely the anchor that a stabilizing economy requires. Now let me talk about the issues of trust, capital, and stability. From where I sit and from the central bank, these are not separate objectives. They are one and the same, and they only work well if they work together. Trust comes first because everything in finance is at its core a promise, whether it's a deposit, a loan, or a currency. Investors, as we all know, are drawn to markets where systems are reliable, where regulation is predictable, and where trust is firmly established. Trust, then, is what turns a good year into a credible decade. Capital follows trust. When trust is present, the risk premium falls, the cost of capital reduces, and money becomes patient, willing to find a 5-year factory to fund, or a full crop cycle rather than fleeing at the first tremor. We must be honest, though, the private sector credit, though improving, remains rather shallow, well under 10% of GDP. What we believe is that a stable economy that does not lend to its farmers, to the productive sectors of the economy, only does half the job. The low lending rates we currently have should open frontiers for growth and expansion. The bankers here will tell you that trust determines the risk premium that they put on the loan that you take as a business. So collectively, businesses and their interest groups can negotiate better borrowing terms for their members. But that's only if they ensure that members repay their loans and they hold each other to account. Stability sustained growth, low and predictable inflation, an orderly foreign exchange market, something we discussed this morning as well, and adequate reserves are the conditions under which trust can deepen and capital can be deployed with confidence. Remove stability and trust evaporates. Capital takes flight, again, as we have painfully learned from our past. So in simple language, trust lowers the costs of capital. Capital funds growth. Growth funds sustainability, and sustainability in turn deepens trust. What binds this cycle together is expectation. In economics, expectations are what we call self-fulfilling, such that if you believe that inflation will stay low, you price as though it will be, and it does. So in the end, our important product is not the policy rate. It is our confidence in tomorrow. That rests not only on the central bank, because monetary policy has its limits. It also rests with you as economic actors. Now let me turn my attention to a few things that we're doing at the central bank as far as monetary policy is concerned to ensure that we sustain this stability. We're safeguarding price stability. The Bank of Ghana has and will continue to work to safeguard price stability. We remain vigilant to the inflationary threats, And we will deploy every tool available in our toolkit to address inflation whenever it threatens macroeconomic stability. And the recent round of MPC was one. Ideally, given the variance between the various rates, we should have been cutting. But we're also looking forward and anchoring expectations. And on the basis of that, we stayed the rates. And the benefit for this is direct and practical. Low inflation locks in low interest rates. Low interest rates allow businesses to borrow at lower cost, to invest, to expand, and to keep their operations running. Price stability, in other words, then, is not an end in itself. It is what makes affordable credit and business continuity possible. We continue to build and to protect buffers, and this is something we continue to accumulate. We're going towards around 6 months of import cover, something that we're building, and we're pressing ahead. For those of you who have followed the Ghana Gold Reserve Accumulation Program that we call GANRAP, towards a medium-term target of 15 months of import cover. These buffers, we believe, will help the economy absorb shocks without panic. And so far, I'm happy to say that they have served us well. The cedi has stayed largely resilient, even though we've seen some dips. But a stable currency is built on as much behavior as is built on buffers. And at this point, I want to speak directly to the markets, the economic actors. We all saw the lessons plainly last year. Those who bet against the cedi and hoarded foreign currency soon found themselves on the wrong side of the trade, unwinding at a loss, as the currency staged one of the world's strongest recoveries through 2025. And the traders amongst us will tell you, there was a time when people who had held now began to dump. Therefore, the fundamentals of this economy do not reward speculation against our currency. I urge every actor, because we've seen that semblance in the market, whether you're a bank, you're an importer, you're an exporter, you're an investor, to transact on the genuine and present needs, not out of fear and panic. Because as you have heard, our reserves continue to build, and they are there as buffers to help us support this economy. This is how, together, not just the central bank, but all economic actors, we keep the cedi stable. Through a transparent and a rules-based intervention framework, we continue to smooth volatility without affecting the fundamentals, so that businesses can plan and price with confidence. The strength of the FX framework introduced last year has already been tested. Even as we intermediated close to 40% more on foreign exchange to meet the high cost of our oil imports due to the US-Iran war, our buffers have held strong, and the market has stayed largely orderly. We're also working to strengthen banks and to free capital. We have made some giant strides working with the banks to recapitalize post the domestic debt exchange program. Through our directive and collaboration with the banking sector, we expect that non-performing loans reduce to 15% by the end of this year and 10% by 2027. Now, all these interventions are to ensure a healthier banking system that then is able to channel more credit into the productive sectors of our economy, whether it's in agriculture, manufacturing, the enterprises that create jobs and impact. We're also deepening and mobilizing domestic capital, and our colleague from Fidelity spoke about that. For those of you who have followed the news, we're coordinating a financial sector-wide agenda to pool and structure long-term savings, which we already hold, by the way. We have over 100 billion in pension funds, in our capital markets, in remittances. Yesterday, for those of you who followed the Ghana firm in the UK, you would have heard people in the diaspora eager, looking for investment instruments to put their money. So those of you in the banking sector, this is a challenge for you. Create products and services that enable them to channel their resources not into just consumption, which is remittance that we all take every month or end of month and consume, but into products that translate into investment into the economy, because the capacity exists. This morning I had conversations about guarantees. Again, our colleague from Fidelity talked about that. I'm sure you're familiar with the guarantee system through Development Bank. We're working on improving that, making sure that on-lending is made available also, again, to reach the SME and small sectors of the economy. But we also have, for agribusiness, GESEL. And again, it's something to look up to, something that, from the central bank viewpoint, we're working to even strengthen, working with the fiscal authorities. As for alternate credit scores, the people in financial stability will tell you that this is a project that we're working on with the IFC, because again, we believe that with that alternative credit scoring, we're able to support, and through the commercial banks, rural and community banks, make credit available to the market. We've already talked about patient capital. The whole point of the pension reforms that created the 3-tier pensions was so we could harness resources to invest long term. So the responsibility is now to move on, having harnessed it, and translate it into real investment for the good of our economy. Distinguished guests, ladies and gentlemen, as I bring my comments to a close, let me re-emphasize my opening comments. We have secure stability. Our charge now is to sustain it. And this is not a burden for the Bank of Ghana alone. We all need to play our part to make the economy work, not only for today, but also for posterity. At the Bank of Ghana, we will play our part without hesitation. And this morning, I invite you to do the same. Thank you for your attention.
Then, I think we can do that with an upstanding whilst we stretch as well. Thank you very much, Madam Governor. Let me see your hands up if you're excited about the fact that BOG is safeguarding price stability. Don't make it look like I'm the only one excited about it. Sure, thank you very much for the insightful address and also for the opportunities and then the responsibilities that lie ahead in the financial ecosystem. We move to take the last remark on the opening. And so with a round of applause, please help me welcome Director of Finance at the Ghana Gold Board, Dr. George Badankwa. A round of applause for him whilst he gives the last remark on the opening. Please clap and keep clapping.
Madam Deputy Governor, distinguished guests, leaders of business and financial institutions, and everyone herein gathered, good morning once again. So the foundation has been laid. We've seen stability. We need to sustain stability. We need to build capital. And so today, I come here on behalf of Gold Board to share with us the little contribution we made towards this stability. And so I have a slide to share. I will look at first where we were which were just shared by Deputy Governor and my brother also from Fidelity. But more importantly, look at what we bring in to also support the sustainability that we're looking at, which is tokenization, a token of gold in a virtual form. And this is to aid the capital formation that has been spoken about. And a token gives us the opportunity to buy otherwise an impossible size or volume of gold. So with any amount of cedis, and the projections are showing about 15 cedis and above, you can own gold. And this is much more so because we have had gold. Yes, we have also supported the central bank in generating FX and building up reserves. Yet, the gold, when it leaves the shores of Ghana, creates multiple businesses and chains for other economies. So, we need to look at how do we create the value, the added value, and also create incomes in perpetuity. And that is what we're focusing on. And so we recall the stress our economy went through, which have been shared already. But I just want to emphasize the impact of this on human life and business. So the debt to GDP ratio that was high was not just a figure. The high rate of inflation was not just a figure. It was not just a rate. And I recall some years back, we used to say, inflation, yedi. But it's turned out that inflation really is important and it affects our pockets and how the cost of living went up. We had DDEP, we had banks well under capitalized, but in recent months we've seen an improvement in capitalization. And so I just want to share with you again Gold Board, which came with a mandate. And this mandate is that of a regulatory one, established under the Act, which is barely a year ago, Act 1140. We at Gold Board has the mandate from all of us through Parliament to buy and sell gold. And so we pursue this mandate by, first of all, formalizing an existing business. We all knew gold was being mined, gold was being exported, but flows were hardly accounted for. We created gaps. And it is very clear that so long as the foreign exchange proceeds were not well accounted for, the economy suffered. And if we look back, even within the years 2002 and the rest, where the economy went through the crisis, we can put it that way, it centered so much on exchange rates. Why? Because investors, foreign investors who had a a significant hold, a majority hold of our instruments, our investment bonds, had to exit. And the more they exited, the more the demand for foreign exchange, and that put the city at the mercy of foreign currencies. And so last year, based on the exports, based on formalization of the ASM sector of mining, we increased our tonnage from about 63.8 tons in 2024 to 103 or almost 104 tons of gold. And that yielded quite a good foreign exchange. Hitherto, it was said that the ASM contributed about 35% to Ghana's exports of gold. But just last year, we did a 50-50 almost. So large scale contributed just about 50, and small scale also same. And that is how regulation can work. And so we want to add to the earlier recommendations and appeal that we need to comply. We need regulation to move forward our economy. And so we want to again say that there have been some changes in the program. And so we have what Madam Deputy Governor mentioned as GANRAP. And GANRAP is Ghana Accelerated National Reserves. That's Ghana Accumulated National Reserve Accumulation Policy, okay, GANRAP, where we, through the Ministry of Finance, are supposed to build Ghana's reserves to about 15 months of import cover by the year 2028. And this is very phenomenal. This will drive the economy. This will help us address missed opportunities that we have witnessed as a nation, because gold is mined here and Ghana gets very little value for it. In fact, gold is not refined in Ghana. The refineries that we have so far have very little capacity. It means gold is first exported and refined, and then we get value in terms of the purity. We get reports of purity outside the country, and that is very serious. And so it's, as part of government policy, we are to ensure that by the year 2030, gold is refined in Ghana, and a lot of measures have been undertaken to address that. Now, beyond gold reserves, that's where we come in. We know of economies such as Norway and UAE that have built their economies on oil. But there are very close examples that we can also observe. Botswana has done that with diamond. And we have Chile, which also did that with copper. So we can also go on the back of asset-backed commodities to be able to achieve greater acceleration towards our growth. And so we are not just looking at physical gold, and we're looking at tokenizing And with this tokenization, we aim at giving every Ghanaian opportunity to hold gold. And thankfully, we have witnessed the passing of the Virtual Asset Act, under which Securities and Exchange Commission has already put up a sandbox. And so we are part of that sandbox. There are so many opportunities for financial institutions within that space. We have banks and other financial institutions that would offer custody services, not just the fiscal good. As for fiscal good and related assets, we also have the mandate to regulate. So together with the Bank of Ghana and the Securities and Exchange Commission, we would want to regulate the environment. And that is an opportunity for fees income. We also have the opportunity in market making, where you could take decent spreads. Under a gold token, you can effect a transfer to a friend, even on a birthday, you can do that. And whilst you do that, you create opportunity for income within the financial sector. We now are also looking at other things that need to be done. If we consider our insurance industry and the pension funds, we need to look at an asset class that will accommodate these vehicles that we are also recommending. We know, again, that pursuing these goals will also create a bigger tax base for the economy. We believe that credits will be well enhanced because we can have gold-backed credits that will minimize lending rates, which we believe will go a long way in addressing issues of poverty, which are all enshrined in SDGs, SDG 1. We also have a lot of female within the mining sector, especially the small scale, and that will balance our gender issues. We will then get decent income from decent work and reduce inequalities within our income levels. And so we forcefully recommend that as a nation, as industry, as corporates, we can issue securities that are backed with golds. And when I say gold, I mean gold and other precious minerals. That will reduce interest rates, even to the point that at the time when the country considers again going to the financial market, we can go with a gold-backed security that will lower interest rates because the credit risk will be very low. And so today we want to recommend that as business leaders, as leaders of financial institutions, as distinguished guests who are also here, there is so much opportunity for us to leverage on. And so we recommending strong collaboration between the regulators, where we come in as a quasi-regulator in the financial markets, and we encourage Ghanaians, all of us, to own our goods. To own our goods in a very small ways that we can make. And that would enhance investor confidence in Ghana, and we will be able to attract the capital that we need. It has been said that we are on the path of stability. That stability must be sustained. And we believe that through our reserve accumulation that we support the Bank of Ghana, we're going to get that. But more so, we also believe that creating assets on the back of gold would really be the end. So on that note, I humbly encourage us to be part of this phenomenon. Thank you very much.
Dr. Ba, please, I may want you to stay. Maybe let me put your laptop on your table. And then the presenters in the opening remark, please, humbly, I invite you to join him for a quick photograph. Team, can we move the podium, please? Is it possible? Okay. I don't think. Maybe while at that, let's have a video rolling.
Hello, my name is Pamela from Customer Service. Please revalidate your account by texting your Ghana card number to 0500,000 247.
Hey, Abili, wabadim.
Madam, give me the numbers behind your ATM card. I'm calling from the head office.
An email was delivered across to our customers this morning.
Confirm if this is your bank account. 100,100,100.
Thanks for sending your bank card details.
Send the OTP now to avoid cancellation.
EcoBank will never call, email, send an SMS asking for your PIN, OTP, bank card, or Ghana card details.
Don't get played. EcoBank, the Pan-African Bank.
Hello, please, I'm calling from Customer Experience Center.
Hello, my name is Pamela from Customer Service. Please revalidate your account by texting your Ghana card number to 0500,000 247.
Hey, Abili, wabadim.
Madam, give me the numbers behind your ATM card. I'm calling from the head office.
An email was delivered across to our customers this morning.
Confirm if this is your bank account. 100,100,100.
First plenary, and that would be on the topic, the future of commodity-backed financing in Ghana, strengthening financial stability, trust, and systemic resilience. Ladies and gentlemen, commodity-backed financing is rapidly becoming one of the most significant conversations shaping Ghana's evolving economic architecture. This session will examine regulatory coordination, systemic resilience, structured gold markets, reserve, strategies, and the future of innovative financing mechanism. Moderating this important discussion is a moment. So that moderating this important conversation, please help me welcome Mr. Alfred Okanse. He is the senior editor and host of TV3's flagship current affairs shows. Ladies and gentlemen, Alfred Okanse. Please let it be louder.
Okay, thank you. Good morning. Still morning. Thank you very much. I think the stage has been set already for what we have ahead of us, hearing from the Gold Board. So, Juliet, thank you. So kind to have introduced me. My name is Alfred Okanse. I work with TV3. And the panel for... Okay. Oh, Lord. This first plenary will be, please help me make welcome Mr. Mensa Thompson, Deputy Director General, Securities and Exchange Commission. Please, let's put our hands together for him. Thank you very much. Also, next, Dr. George Ba Dankwa, please come back. If Doc, thank you. You want to delegate to him. I need to know who he is. He's certainly not Sami Jemfi, so please. Who are you, please? Nana Kwame, Japan. Who are you? Derivatives, Gold Board. Please, let's put our hands together for Nana Kwame. Thank you. All right. Next, we have Peter Jassa, Head of Treasury, EcoBank, Ghana. Let's put our hands together for Peter. Thank you. Thank you very much. Thank you. I think the parameters for this conversation already put together by the Gold Board, earlier presentation on the future of commodity-backed financing in Ghana. I think that we have a history when it comes to commodity-backed financing in this country, going back to what we do know with syndicated loans that the state, through Cocoa Board, over time has had, future cocoa revenue being hinged against some loans that are used to finance some projects. We've seen that also evolve into previous projects such as the Gold for Oil program, where we banked our hopes on oil revenue, got some money, and now we are seeing Gold Board bringing some revenue as well through the process and the program that has been put in place. Last year, we're talking about some $20 billion that the Gold Board brought into export revenue from gold. Clearly, this is a path to go. But then again, from where you sit in your individual capacities, what's your own assessment of the commodity-backed financing programs that we have embarked on in this country? And I'll start off with you, Mr. Chisa.
All right, thank you, and hello to all. The opportunities in commodity-backed financing is huge. Focus has mostly been on the traditionals, i.e. minerals. But in Ghana today, for instance, we have the Ghana Commodity Exchange, and there is room to expand commodity-backed exchange into areas like maize, soya beans, cashew. And whilst along the line, I'll give you some case studies of how share nuts in the northern region and how financing is impacting communities in the north. Thank you.
Mr. Thompson, also to you as well, in the same path of commodity-backed financing that the Securities and Exchange Commission, yourselves, what you have been doing in reviewing the potential, the opportunity in this area.
Thank you very much, Alfred, and a very good morning to everyone. Alfred, this is a very interesting conversation, and it's happening at a very critical time, where we're both reviewing how the traditional commodity financing frameworks have worked vis-a-vis the emerging commodity trades that are happening within the virtual asset space. And so in the traditional space, we've seen the activities of the commodities exchange. We'll see how these commodities are traded, from farm gates to the warehousing and on the commodities exchange where the trade ultimately happens. We believe the optimum, pricing efficiency that we should have had in terms of commodities, we haven't gotten there yet. We also believe that our commodities market do not provide enough viable alternatives for an efficient commodities trades to really happen. And so there's just a few traditional crops that are still trading. The commodities exchange is still struggling to be able to bring other commodities on the market. There's conversation about how to bring even gold and cocoa and others, which are very critical, essential commodities within our market. But, the market is happening around these things, and so the market have not been able to develop to full capacity that it's supposed to be. And so there are gaps. But I think that the opportunities that the conversation we're going to be having today in terms of what virtual asset brings will be able to plug that gap.
I see, because the Gold Board presentation earlier by Dr. Ba mentioned digital asset custody, which I think SEC sits directly on your lap, so we'll come to that as well. But from the Gold Board, I know this is one that already you're leveraging, and the evidence of its impact in the prospects is there. But just give us an idea of why commodity-backed financing is becoming increasingly, from where you sit, important in today's economic environment.
All right, thank you. So with regards to commodity-backed financing, Dr. Thompson made mention of the traditional way, and we are more of the virtual space, in the sense that even though Ghana is already doing the traditional way where we export gold, we generate FX to support the economy. But there's one key thing that we leave out here, which is the financial inclusion. And we've seen how spectacularly mobile money has performed across Africa. And when you talk about the virtual asset in terms of commodity-backed financing, where you can generate FX both locally and internationally, where you allow every person to have access to commodity like gold in the digital form, where you can open access to liquidity from various aspects, various angles, from institutional investors and retailers. This is going to be a game changer for our economy. And that is why we as Gold Board, we are very much interested in this. Because you don't just generate funds, but you're able to control the market. Because when you have a digital asset backed by the physical one in your vault, what it means is that as long as the digital one moves and travels, it's still within your ecosystem. Unlike the traditional one where we export it and we lose asset to the commodity.
I see, but then again, you should also take cognizance of the risks associated with the path that we're on. And I think that this is one that came up sometime earlier in the year. In the first quarter, we saw gold plummet in price on the world market as against the projected price. I think last year we were talking about some $6,000 an ounce. But in the first quarter, we saw it go down to under 4,000, and that raised some concerns as to how that was going to impact on your projected revenue. How are you inculcating all of these risks associated with this commodity specific to gold in your modeling at Gold Board?
Yeah, that's a good question. With regards to risk will always exist. Even with the traditional gold trading that we do, there is risk because we can buy gold, let's say today at 4,500, and maybe in 2 days' time, the value of that gold has dropped to maybe $4,100. What it means is that if you do export that gold at that price, you are losing a certain margin from the difference in price. Now, the good thing with the virtual space is that you are talking about people assessing gold price in real time. And you're also talking about assessing liquidity in real time. And it also makes it easier for Gold Board to hedge. against gold price volatility. We've seen how this Iran-US war has impacted gold prices so much that anytime oil spikes, gold drops, and anytime oil plummets, gold spikes. And it makes trading even difficult in the traditional way, but we are able to hedge against the price of gold through ensuring derivative trading to hold the price, and then we are able to hold positions against a certain price of gold that we buy, just to minimize the losses in the price volatility. And then when you talk about risk, you also talk about the technical risk in terms of the technology, and that's also key aspect that we'll be working on, because even we are going to go into this whole tokenization, we are going to audit our smart contracts to fix vulnerabilities, make sure that the smart contracts are able to operate on their own. So if you're able to audit them, then of course we have experts that will tell you that based on these flaws, these are the risks that your smart contracts stand, and then you fix them, and then before you deploy them for public access. So these are all risks that we believe are there, but of course we are putting in measures to mitigate this risk.
Yes. I'll come to you.
Yes. Let me set the context properly, because I think a lot of listeners are a bit lost on the discussions that we are having on tokenization. Okay. Because it's a new thing that people do not understand what it is.
In fact, I was going to come to tokenization as a topic on its own for you, right? But where I'm on now is a risk associated with the modeling and what Gold Board is doing. That's very different from what. But I'll come to you on tokenization. So just stay on that path.
If we set the context properly,
okay,
we're able to address the risks the answers that you want to elicit from him. You understand? Yes.
Okay.
Yeah. So tokenization simply is just fractionalizing, taking an asset and fractionalizing the asset into smaller units for retail investors so that people can sell, people can buy. So people who can buy the big asset can buy those smaller units, just like a shares in a company. And so when you come to gold, the tokenization of gold simply means that, for example, you take 1 kilogram of gold. If you're selling, the ordinary Ghanaian will not be able to purchase the 1 kilogram of gold. But if you fractionalize it into maybe 1 gram of gold, then ordinary Ghanaian with 10 cedis, with 15 cedis, with 20 cedis can buy this gold. Then you can distribute widely to other people. Now, the critical aspect of this whole tokenization and where the risk lies are, one, the underlying asset. How to safeguard the underlying asset. So, for example, if we tokenize gold and we put it on the blockchain and Ghanaians buy, who holds the asset? Who keeps the asset safe? As far as the asset is safe, it means that there is trust and the commodity can trade. Mind you, there are going to be secondary markets, such as exchanges, that are going to be trading these tokens. And so, for example, people who cannot wait or for certain contingency want their money can go onto the exchange and sell. Now, it is these trades that happen with the smart contracts that he's talking about. Now, for us, the risk of keeping the asset is number one, and then also the minting of the token. One, you want to guard against duplication. For example, if there's 1 kilogram of gold sitting with an independent custodian, you do not want, and as a regulator, you have approved that, for example, only 100 tokens be issued on the back of that gold token. You do not want anybody to be able to duplicate those tokens and also be selling or circulating. And so the minting risk is there. We have the burning risk, which is the end-to-end, so the minting, then the burning. Now, all these things will happen within a value chain and a set of rules that the SEC is setting. And so we've had a lot of discussions with Gold Board on developing the framework, and I think subsequently I would drill down to some of the frameworks and the areas that we are thinking about one, in terms of issuance, who can issue gold tokens within Ghana. 2, which companies can participate as service providers within the ecosystem. 3, who are going to be custodians for the gold that are going to be issued. 4, who can be the distributors of these tokens, and then the other ancillary services that come with it, where the other financial sector players can also play.
I see. And I was saying that you've just interwoven the risk associated with gold tokenism into other things that the Gold Board does. That's what I was talking about, having that progressive conversation, because this gold tokenism is one of 6 instruments, according to the Gold Board, that the capital market can leverage when it comes to gold. So we're just looking at one aspect of a very broad scale in terms of opportunities, right? So we can look into it.
No, Alfred, it is the SEC that is setting the rules. So when it comes to this space, the SEC is the regulator, not Gold Board.
I get you.
So Gold Board is only going to be an issuer.
I understand that perfectly. What I'm talking about is the opportunities that the Gold Board talks about that the capital market can leverage. And I'm picking from what Doc presented earlier. Perfect. So gold tokenism is one of them, and then the exchange trading products, ETPs, and then the gold ETFs as well. Those are the other avenues, right? That's one thing that you talked about, is it not? I see. But beyond these that you have mentioned, and I'll come to you, but I just want to stay with you a bit further. There's that issue of the currency differentials as well. If you recall, this was one of the major issues that the Bank of Ghana had to deal with, for instance, as contributing to some of the elements of its loss in 2025. Going forward and thinking through what can be done to ensure that we get the most out of this Gold Board program. What are you putting in place to ensure that, for instance, the currency differentials doesn't contribute so much to the loss that will be associated with executing your mandate?
Okay, so some of the key things we are looking at, like I made mention earlier, is hedging and then also incorporating more analysis. We shouldn't look at it from the perspective of just purchasing the goods at different times. But you see, the market has a way it behaves because something price action. The market has a certain pattern that it follows. And with this occurrence of fundamentals like how the US index is performing and how what is happening with geopolitics, you can to some extent know when gold prices are going to drop. You can to some extent know when gold prices are going to go up. So you have to look at your buying and selling strategy to fit this kind of system. And that way you'll be able to at least reduce the losses or even get better in terms of making the right purchase and then selling at the right time, or selling the right quantity of gold at particular prices at the right time. So that is how you are able to minimize the losses.
I see. Mr. Chisa, now you mentioned expanding the scope of commodity-backed financing beyond just gold, cocoa, and crude oil. You mentioned cashew and others. The agri sector itself has its own risks associated with it. That's why for you, financial institutions, you have your own reasons why you don't extend so much in terms of loans and support to the agricultural sector. There's that clarion call for that to be changed. Review it, support the agricultural sector to be able to drive the growth that we're looking for as a country. If we're having to expand the scope and then accommodate some of these products or cash crops like cashew to leverage in terms of commodity-backed financing, from where you sit, what are some of the risks associated with it that we would have to deal with if we want to go on this path?
Thank you. The risks, quite a number. One is, as he indicated, price volatility. But banks, we take risks, but calculated right. So in price volatility, for instance, we're looking at how the borrower would get his money back, and in those matters, we then ask for probably secured off-takers or hedging of the sale so that his price is determined at the time of sale. The other one, okay, when it comes to community-backed financing, okay, is the infrastructure in place, right? You need the warehouses, the regulation, and the markets to enable this to happen, and us all working together. Okay, so once the infrastructure is in place, then you're able to help manage the risks. The other part is providing the expertise as well. Okay, we talk about the opportunities out there, but we have not built some expertise in trying to take advantage of those areas. Today, last week, I was dealing with a client who does pre-funding of share notes. They've developed a model where they go into the market, about 270,000 women community groups, where they actually provide pre-funding, and the women go out to go and buy the share notes, come back and sell it to the company, and then they export, and then monies come back. So they have built the capacity in country. Yes, and with that expertise, they are able to provide funding to the clients and do training for them as well, so that the returns come in. So those are some of the things that we can look at in managing risk.
But how about the ability to attract long-term financing, using community-backed financing as well? In that area, do you think that Ghana holds that potential?
Oh yes. Our initial discussions, we talked about cocoa. Right. Cocoa was one of the major large-scale finance attracting outside oil in Ghana. In the past, we used to do billions because of the structure involved. Now, if you have the infrastructure in place, we are actually able to go into the capital markets, issue bonds, because we know where the money is or where the money flows to. True. We have the market in place. You have the receivers, the players in place. You can now go to the market, issue a 2-year bond, for instance, to go out and finance to be able to sell. At the end of the day, what the banks look at is end-to-end, where you can pick the commodity and then you can sell the commodity and the returns come. Once that end-to-end is achieved, we are able to finance medium-term or investors. Once they're able to see the end-to-end, are able to bring in capital to invest in those areas. And it's the infrastructure in place and the regulation in place, the market players in place, that builds that confidence to also attract the investors to bring long-term capital to invest in those areas.
Well, we have billions of cedis sitting in pension funds. Do you think it's one area to also tap into to leverage commodity-backed financing?
Oh yes. If you take warehouse receipts, you have Ghana Commodity Exchange. If an aggregator or a producer deposits produce, let's say soybean or millet or cashew, right? It goes through a process for grading to ensure that the quality is a certain level, right? So once that is determined, you know that if you go to the commodity exchange, you can get this level of grade, right? It also gives the supplier or the seller a ready market that I can always come here and bring in this commodity. The buyer in or out also knows that on this market or the Ghana Commodities Exchange or on this platform, I can always get this produce, right? So then the market is there, the confidence is there, the infrastructure is there. Today, there are millions of cedis in pension funds, okay? They are able to actually finance some of this because there's a ready market for it. For money guys or lenders or investors to bring in money, they need that trust, they need the confidence, and they need to know that they will get return. So once all that is established, it's good to go.
But there certainly are some safeguards that need to be put in place, is it not? I mean, going forward, what if you just outline one or two of those safeguards, and then we'll go to the the regulatory framework, which Mr. Thompson will speak to. Yes.
Yes. The safeguards, one, of course, regulatory framework, because if you're coming in, you want to be sure that regulation doesn't change overnight. That will put you at risk. You want to be sure that you trust the system, i.e., when it comes to, for instance, warehouse receipt financing, that whoever says he owns that paper actually owns the paper, right? And then you're able to do the financing of that.
I see. But earlier, you outlined some crops that we can leverage when it comes to community-backed financing. You mentioned cashew.
Cashew, share.
Share.
Yes. In the north, for instance, we do a lot of share financing indirectly. You can also maize.
Maize.
Yes.
I see. Interesting. And any example already existing with maize as
yes,
with
the
that
maize,
potential?
Yes. So for the maize, it's more of when you do the community-backed financing for maize, for instance, what it enables the producer is it reduces distress selling, right? So when there's bumper harvest, you can actually store the maize and then take financing from the bank. And then when we're in the dry season or when we don't have a bumper supply of maize on the market, we are not able to come to the market. So community financing, also community-backed financing, also helps in reducing price going down, right? Because the producers are able to control when to come to the market and able to take funding from the banks to finance the operations whilst the stock is there. And the banks know that the stock will be sold, so they're also able to finance against.
So there must be a ready market for it.
Yes.
Because you're dealing with already some post-harvest issues. You have tons and bags of maize, rice in the north, thousands of them, and we've had to talk about it so many times. So if you're going to go on this path, there must be that assurance for ready market for you to sell to get your money back. That's another issue you would have to deal with for another day. But Mr. Thompson, that bit of the safeguard of the regulatory framework, and that sits directly on your lap. What's the thinking in terms of regulatory reforms and measures that the SEC is putting in place to ensure that if we're going on CBF, the community-backed financing, there will be enough safeguards for investment?
So we've passed the Virtual Asset Service Providers Act into law, and the Act makes the SEC and the central bank co-regulators of the space. And so if you take commodities, for example, tokenization, for example, we have stable coins and then asset-backed tokens. Even under stable coins, you have two. You have the fiat reference stable coin, which is going to be regulated by the central bank, going to be issued, which is pretty much digital money that will be issued and circulated by the central bank. Then you have commodity reference stable coins that also sits with the SEC, because then once the underlying asset moves from fiat to commodities, then it comes to the SEC's jurisdiction. What we are building in terms of the rules and the framework is to have a robust custody framework in place. And so we are going to be licensing some independent custodians whose role pretty much is to custody the underlying asset. And so here there's also an opportunity for the banks to be able to play. And there are certain requirements that we are putting in place. When you drill down to tokenization in itself, there's going to be opportunity to tokenize a number of assets, from gold to diamond to bauxite and other minerals. There's going to be opportunity to tokenize real estate. And so people can tokenize real estate, people can tokenize land, people can tokenize, other real world assets also. And so in all these conversations, the biggest conversation is the custody. Then the safeguard of the tokens is also going to be very critical on the infrastructure on which those tokens are going to be distributed. And so with a few of the banks who have approached us, we've had a number of conversations for the banks to be able to invest in the necessary infrastructure. And so the banks has two roles to play here. One as independent custodian, and two as also a custody of the virtual tokens when it's issued. There are going to be institutional buyers, such as pension funds, who are going to be investing in gold tokens. They will need the banks who have the infrastructure to be able to custody the virtual tokens on their behalf. It's a big opportunity for the banks. For us to also license you as an independent custodian, we need to be sure that you have the requisite infrastructure to be able to custody the assets. So we would have to inspect your vaulting systems, your safeguards, and other infrastructure that is necessary to ensure that the assets are going to be custodied very safely. When these tokens are issued, they are going to be in circulation. There are other derivatives that we foresee will come out of these tokens. For example, people are going to be able to collateralize these tokens and borrow on the back of these tokens. So, for instance, if I have, let's say, 100 gold tokens worth maybe 100,000 cedis, and I don't want to sell now, I can collateralize that gold token and get a financing from the bank, and use that money up front and hope that once gold prices goes up, my token is able to appreciate and I'm able to pay off the bank when I trade off my token. And so those derivatives we are also going to come up, once the token is issued. And so the rules for this is what we are setting up together with the central bank and also with support from Gold Board, to have a framework that really mitigates the risk areas. Because some of the tokens, in fact, if you go to the virtual asset space, there are certain virtual assets such as Bitcoin. We all have heard about Bitcoin, which is backed by absolutely nothing, just speculation. And today, Bitcoin is between $80,000 to $100,000. I don't know the current price. $71,000 for one Bitcoin, okay? And it's backed by absolutely nothing, just speculation. What we foresee with the issuance of these gold tokens is that if you can have a Bitcoin that is backed by absolutely nothing, just speculation, to go up to $71,000, then what about a gold token which is backed by actual gold? So we foresee the potential there as well for the prices of these to skyrocket even beyond the underlying pricing of gold, which is also very possible. Okay. So we want to be able to guide the process, in such a way that we are able to mitigate those risks when they crystallize. There's also the opportunity to tokenize mining concessions. We are developing the rules where people who have mining concessions now with a grade A prospecting report will be able to tokenize the concession and raise financing to develop the mine. And so with the Goldfields mine that the lease is about to expire, the concession can be tokenized, raise billions to develop the mine, and the distribution can go. So for example, if you tokenize, pension funds can now invest in those tokens. And once the gold is mined, it's taken into custody, and when it's traded, the proceeds come to Ghanaians. And so it's going to open up a whole lot of avenues for people to be able to raise financing and to be able to do different things. But like I said, the rules have to be properly couched in such a way that we're able to deal with all the risk points within the framework.
The rules is important because a number of the things that you said are quite broad. If we have to go into the specific detail, then we'll get to know the real intricacies and then what kind of financing module would be put in place to ensure some level of confidence and safeguard investor interest. So that's another leg of the conversations of the issues that you've spoken. We will go into the audience now and get some questions. If you have a question, you put up your hand. The microphone will come to you. please go straight to the point, as precise as possible. There's a hand here. And then there's one at the back. There's a third one here. So please mention your name and kindly go straight to the point. Thank you.
Ambassador Francis Kobia is my name. The organization is the New Ghanaian Farmer. It's a print media giving visibility to agriculture and farmers in Ghana. My question goes to the speaker from SEC. Please, you spoke about tokenization and assets in Ghana. And when you come to the agriculture sector, it holds a rare asset like cocoa, shea, timber, and the other commodities that we know. The question I want to ask you is, how can Ghana regulatory and financial ecosystem practically use this tokenization and financial asset to unlock capital for our farmers, the smallholder farmers, the people who are in the sectors who are not in this room? Why I'm asking this question is, anytime
I get the question, please. Thank you. Let's avoid the synopsis, I beg you. Thank you.
Thank you very much for the opportunity. My name is Michael Kwamichi of KS Services. My question is, with all this that is being said, are we learning from any countries or companies that are into this technology that we're talking about? If we have learned any lessons.
Which technology exactly are you talking about?
Tokenization I'm talking about. Tokenizing the commodities and all that. Have we learned from any countries like embarking on this and that they have done it successfully? Because all this we're talking about is all about technology. And he also mentioned about blockchain, which also largely refers to cryptography and all that. So, and he made mention of Bitcoin and all that. There are certain key concepts that gives Bitcoin the value that it has.
You know, I get you. That's why I indicated there are a number of things that he mentioned. If we want to go into the details, also another topic altogether. Yeah. Yes, it's not just based on speculation.
If there have been any lessons learned, they can
yes,
share
from
with us,
other countries, right?
Yes,
Thank you. Thank you very much. Thank you. Yes, yes.
Thank you. I'm Faustina Odrie-Jakon from First Finance. My question is to Mr. Thompson. On the tokenization, I keep hearing custodians, the banks, the custodians, the banks. I'm coming from the fund management space, so I want to know what opportunities are there for the fund managers and then the brokerage firms. Thank you.
Thank you very much. Take the last and the first, and then we'll go for the second one. We're done. Yes, please.
All right, thank you. I'm Simon from Fidelity Bank. I want to find out the role of CSD in the securities custody arrangement. I did not really hear anything around CSD, but currently they play a very central role in this ecosystem. Secondly, I also want to find out, we talked about stablecoin, those that are backed by fiat going to the regulator. How does this align with the digital currency agenda we've been on almost 3, 4, 5 years? At a point, it was so much out there. So what is happening? Would there be a convergence between our ECD and what you are talking about? I think we could if you pride.
Between the ECD and the tokenization.
Exactly.
Okay, thank you. So all 4 questions are to you. Tokenization has sort of tokenized our interest this morning, but anyway. But before you answer that question, the second Deputy Governor of the Central Bank would like to take leave of us. Madam Matilda Asante Esiedu, please let's put our hands together for her as she leaves. Thank you. Thank you very much for coming. Thank you. Please, let's resume your seats. Yep.
Hello. Yes. So let me start from the last question, the ECD, and the ECD is pretty much a CBDC. Okay, it's pretty much a CBDC, just like Obama. It's just a central bank issued currency. Okay, but a virtual representation of the central bank's currency. Stable coins can be issued, so it's only a central bank that can issue a CBDC. But a private issuer can also issue a stable coin. And so, for example, as we speak, there's a company that has come to do a presentation to us. They want to focus on trade between Ghana and China. And they look at how much importers and exporters struggle to send money to their suppliers in China. And so they want to issue a stable coin that on the exchange, they can be able to mobilize money from the importers' bankers here and use stable coin to transfer the money to the supplier in China. Okay? And so that is a private issuer trying to issue a stable coin. But CBDCs like the ECD you are talking about is only, a central bank that can issue a CBDC. And it is only referenced in his own currency. That's why it is called ECD. But the other stable coins, such as USDT, USDC, okay, and anybody can issue other stable coins that are in other currencies. Somebody can issue a Naira denominated stable coin, okay? And so there are differences. But for monetary policy issues and for issues of financial stability, that's why the central bank is working on the rules to be able to converge these things and be able to, monitor its issuances, its adoption, and its integration properly.
And question about fund managers, what their role
I'll come
will
to
be.
the fund managers. Then the other question was on the CSD. The CSD is basically a depository for traditional securities and also a registrar. When you come to the blockchain, because it's a universal ledger and it's an encrypted representation of the digital asset, which is universal, anybody can see, you don't need the job of a registrar or you don't need a job of a depository. Okay? What we are doing at the SEC is to put a lot of frameworks on the custody job of the exchanges that are going to be trading these tokens to ensure that at every point in time, the amount of tokens traded on the exchange, there's a fiat equivalence of that tokens being held in custody by a local bank, so that at every point in time there's a matching. The amount of tokens circulating on the exchange must be equal to the amount of fiat currency sitting in a custody bank, so that you can mitigate that risk. So you don't need a registrar or a depository to be able to record this. This is a universal ledger. It's accessible to everybody. For fund managers, you've been crying for alternative financial products and investment tools within the market. This is what is one of the many innovative investment products we are bringing to the market. Now, so you will not be restricted only now to the few equities trading on the stock exchange or a few bonds on the fixed income market or the government treasuries, which has currently plummeted to an all-time low. Now there's going to be real-time opportunity to be able to invest on, advise clients and invest clients' funds in tokens that are backed by real tangible assets that are verifiable, that tomorrow, if something is supposed to happen, you can fall on the underlying asset, liquidate it, and pay off investors. And so the risk premium there is really, really low for that. And so that's a lot of opportunity. You can also secure a virtual asset brokerage license where you can be able to buy virtual asset on behalf of your client. It's not just for the fund managers, the bank can also be able to offer these virtual gold tokens that are issued to their clients through when they have when they are duly licensed as a virtual asset brokerage.
Smallholder farmers.
Yes. There are other proposals we've received to tokenize so many things. One of the companies that is currently talking to us want to tokenize cocoa, the cocoa bean, and be able to raise capital for government upfront to finance, to basically to eliminate the syndication, tokenize the bean, put it on a blockchain, and give it, and investors can participate before the cocoa is now mobilized and sold. And when it's sold, now investors get paid on the blockchain. We are still looking at the framework. We are yet to engage Cocoa Board to come up with, a proper understanding on how this can be done. And so there's other things that people are talking to us, but this is a very fluid space, and so we want to be very slow and sure. We want to be able to test, and that's why we've started the sandbox. The main purpose of the sandbox is to help us as regulators learn, because we do not have the full knowledge of this sector. So we have companies that are piloting different type of activities within the sandbox, and we are learning about these activities. And then finally, before the year ends, we'll come up with the rules, the guidelines, the directives that will guide how these products are going to be issued, traded, and exchanged. Thank you.
Right. Well, okay, there was a question about whether we're modeling what other countries are doing as well. Mr. Thompson, other countries, whether you're understudying what other countries are doing in this regard and modeling alongside those experiences.
Yes, there are different countries that we are looking at. I'll let Kwame speak with that.
Right.
All right, so if you look at the UK, for instance, UK passed a law which makes a digital asset a property. If you own a digital asset, it's a property just like you owning a house or a land. Then if you look at the UAE, for instance, recently they passed a law which allows even companies to pay their workers in digital assets like USDT. Then if you look at Hong Kong, for instance, Hong Kong has been very much ahead in terms of when it comes to digital asset. Myself, that is where I used to. So we as Ghana with this tokenization, these are the countries that we are looking at in terms of learning the best practices that they have when it comes to tokenizing real-world assets and like commodity. In fact, tokenizing gold, we are not going to be the first because if you go to the market, we have the Pax Gold, we have the Theta Gold, which are already in the system. But we are also looking to learn from these big players and even make it better. And the good thing about ours is we are going to be a sovereign nation that is offering that for our citizens and even across the whole of Africa and the world.
Are you taking into consideration the fact that the ecosystem in these countries that have done it are much more matured and advanced, and and you have those the frameworks in place to ensure safety?
Yes.
And that level of confidence, which is very important. Our financial sector has its own challenges. We're emerging from a number of situations in the past, and so would you also align with those who say, you know what, let's have some timelines that would help us graduate a lot more confidently and slowly than already talking about doing it better than those who already have the framework?
Well, so what we are looking at, in fact, the key thing with this whole tokenization we are discussing here is education, because the masses need to understand what tokenization is about. That's why we have the SEC sandbox. The sandbox allows us to do some kind of experimenting in a very small environment before we decide to bring it out and scale it. Then the key thing with education, because you don't want people thinking that this whole gold tokenization is another form of, excuse me to mention, the number one case.
Scheme.
Yes, a Ponzi scheme or something. This is entirely different. It's just like you having money, physical cash, going to put it in the bank, and then seeing the digital representation on your app. It's the same thing, you buying physical gold, which will be stored in the vault, and you seeing the digital version. So education is very key here, because we need to let everybody understand the basics. And the good thing with the blockchain technology that we are using here, it brings a certain high level of traceability, right? And also avoid double spending, which has always been an issue when it comes to digital assets.
Yes, I need to take the last three.
Just to add briefly, Alfred.
Yes, briefly.
One of the things we are also doing is to build a tokenized asset registry. So we are building a tokenized asset registry. And what the registry is going to do is that it's going to capture and assign unique IDs to assets that are going to be tokenized. And so, for example, if you tokenize this chair, we'll assign a unique number to this chair such that nobody else can tokenize this chair again. So that one of the risk safeguards that we are putting in place is to build a tokenized asset registry that will keep records of all assets that are tokenized within our jurisdiction, so that nobody is able to issue other tokens that will dilute the quality of the underlying asset.
Okay, thank you. Yes, please.
Hello. Yes. So my question is very simple. I know the law has been passed and all that, but when can I walk into the offices of SEC as a fund manager to register to buy or sell asset or virtual assets on behalf of my customers? When?
Okay. Thank you very much.
Thank you. So my question is on how banks and financial institutions can note their interests in these assets if someone is using it as collateral for a facility. Thank
What's
you.
your name, please?
Kelda Okanse from EcoBank.
Right. Any more? Okay, let's go with the two.
Okay,
yes.
so let me start from the last question. So that is one of the reasons why we are building the tokenized asset registry. And one of the key things we do as part of our EDD on the asset to be tokenized is to ensure that there are no encumbrance on the asset. So for example, if somebody wants to tokenize a real estate, okay, the first thing we want to check is the land document. We also then have to check the collateral registry to see if there's any encumbrance on that particular asset. Once we are, it's only when we are sure that all these encumbrance do not exist that we are able to now take the asset in custody and approve you to issue the tokens on the back of those assets. And so that risk is being taken care of by the tokenized asset registry that we are developing. The other question also had to do with when you can come in. So like I said, we've started the sandbox. The SEC and the central bank decided to go on the sandbox approach because we wanted to learn and develop the rules. And so the sandbox was announced I think a couple of months ago. We've almost concluded the framework to begin live testing. We've also deployed a monitoring system for virtual assets. So we are currently working with a company called TRM Labs. TRM Labs is the company that has been deployed by VARA. VARA is the Virtual Asset Regulatory Authority of Dubai. Dubai is one of the biggest space in terms of virtual assets. And TRM Labs deployed is the company that did their monitoring system for them. We have also engaged TRM Labs, and we've completed our onboarding with TRM Labs. And so currently we have visibility on all virtual asset trading within the country, especially on the big exchanges. Next week, we are doing the API integration for the local virtual asset service providers, so we can also have visibility over the activities. We want to complete the sandbox period for a period up to 6 months. After that, we'll begin reviewing of the activities of the entities within the sandbox. Then we'll begin the transition process into full licensing. But before that, we will issue all our guidelines. So we'll issue our guidelines on tokenization, we'll issue our guidelines on virtual asset brokerage, we'll issue our guidelines on virtual asset management, we'll issue guidelines on virtual asset ETFs, trading platforms, and what have you. So we'll publish all the guidelines on our website, and then we'll issue a notice to begin licensing. And so we're hoping that we'll be able to issue our first virtual asset license by the end of the year, if all things being equal.
I see, but
this year.
there would be some stakeholder engagement with the financial sector players, is it not?
No, we've done a lot of. In fact, we wrote the Virtual Asset Act with the stakeholders. The guidelines. So as part of the guidelines, we do what we call an exposure draft. Mm-hmm. So before we issue the guideline, we publish the guidelines, the full guidelines, so people can make input into the guideline. Then after that, once we've collected all the comments, then we engage the key stakeholders, and then we finalize the rules and we publish. So once we publish, you will see that most of our guidelines are very consultative. Most of the rules within the virtual asset space, and the people within the blockchain sector can attest that we have engaged them a lot on most of our rules.
Yes, the engagement is continuous. It's a continuous process, is it not? Because some of the questions I'm hearing clearly indicates that there's a certain gap in information that certainly must be filled by you.
Yes,
every step of the way.
So one of the things, I think very soon we'll be doing a roundtable for the banks. I think that, Alfred, it's not just information, it's because we decided to go on a slow implementation approach. But over the past few weeks, the banks have been asking a lot of questions. How do we play? And those who have come to us, we've sat them down, we've taken them through the process. There's a few of them who have come to us. What we are planning to do is to organize a roundtable for the financial sector players, take our time and take them through this whole virtual asset framework, where the opportunities lie for the banks, where the opportunities are for the brokers, where the opportunities are for the fund managers and other players within the ecosystem, so that everybody can be prepared when we begin the full licensing period.
It's important. Yes, please, finally.
Yeah, so for us, we have a roadmap which we are using, and we look to establish 3 key things. So one of them is liquidity. The second is the community, and the third one is the tech itself. And when we talk about liquidity, that is where we see the commercial banks and the various banks coming in, because we don't want the situation where people will have the virtual tokens and they cannot cash out, they cannot liquidate, they cannot have access to. So we've been able to engage various stakeholders like the SEC, the Ghana Commodities Exchange, and then of course we are looking to also finalize some engagement with the BOG, and then we are also looking to even have more banks on board, because for our first targets, which is with Ghanaians who are the community, we believe that the banks and the mobile money payment system is going to play a key role that is going to give people easy access to the gold tokens in terms of liquidity, both in and out. So this is where we see that the banks have a huge role to play. So it's not like we are doing something separate or independent of the traditional financial institution, but it's something that both ecosystem needs to collaborate to even make the ecosystem way stronger.
Thank you. Just finally, I mean, on this tokenization, it hinges primarily on, one, the collaboration with you, and two, most importantly, financial education, is it not? Because you've heard already the financial literacy was not that high even before the financial sector cleanup that impacted on confidence, the DDEP that impacted on confidence, and then we're having to migrate into a sector like this. How critical is the matter of financial education to the success of this, and how should it be done?
Financial education is very critical in this area, but it will surprise you to know that there are a number of people who are actually dealing in this on the side, okay? And as a bank, we do get questions a lot on what to do, how do you get into it. Today, even on our digital platforms, you see transactions that go into what you call the stable coins or the cryptos and the like. For us, it's us to work with the regulators, okay, and educate our clients on the guardrails, because there are risks involved as well. Work with regulators, work with market players to educate all other stakeholders, and particularly our clients. So financial literacy in this area is key.
And finally, from you, what one single policy or market intervention, from where you said, would have the greatest impact on strengthening trust? That's number one. Stability and resilience.
Well, it's not one single thing. You know, the market that we work in, transparency is important. That everything you do is not opaque and there's some force behind it, right? That's one. Two, enabling environment in terms of regulation. So as he's saying, before we actually go into it practically, when guidelines come, it gives you the basis or the field that you can play in, what to do and what not to do. And indeed, the virtual assets regulation, for instance, it was a good one because the regulators are actually ahead of the game. Now it's left with the market to put in the infrastructure and take advantage of it.
Thank you. Please, round of applause for the panel. Let's put our hands together for them. Thank you, Gold Board, Security and Exchange Commission, EcoBank. Thank you. And Juliet takes over. My name is Alfred Okamse. Thank you. Thank you so much.
Well, that will be going for our cocoa break. It's going to be just 15 minutes. Because of the time, I'll be so excited if you could just grab something and then get back to your seats and we continue with the second plenary. Do we agree on that? Some are smiling, some are not. So we'll go for a 15-minute cocoa break. Grab whatever you want to grab. Please get back to your seat. Let's continue with the second plenary so we could make it out of here quickly. Thank you very much, first plenary.
which is critical in accessing financing and the modes by which we can access this financing across Ghana, Africa, and across the world. My name is Winston Taki, and I'd like to first of all invite my panelists to help me have this conversation. First, we have the head of marketing and public relations with the Ghana Stock Exchange in the person of Jerry Boichi-Dankwa. Please a round of applause for him. Followed by the director of Strat Growth Management Partners Limited, Nanaya Owusu Banahene. Please a round of applause for him. Also joining us is Dr. Richmond Frimpong, Advisory Board Chair of Financial Literacy Africa. A round of applause for him, please. And the Managing Director of EDC Investment, you hear his voice mostly on Joy FM. Please a round of applause for Paul Mante. Fantastic. Gentlemen, it's great to have you with me this afternoon. And I'm looking forward to more insightful conversation. And our topic, our conversation is going to be centered on mobilizing long-term capital for growth and enterprise. Over the year, let's say the first half of this year, there's been a lot of engagement on the Ghana Stock Exchange. As of today, the composite index has returned to 64.21%, with 263 billion Ghana cedis market capitalization. That is basically telling you that we have 37 listed companies on the stock exchange, with 5 of them on the GAX market. And these numbers, a lot of us want to understand how they came by it. And I'll begin with Mr. Jerry. Over the years, this has been the most active engagement and volume traded on the Ghana Stock Exchange. What have you been doing differently this time around that we are seeing these numbers?
Thank you very much, Winston. So I believe that capital will always go to a place where there's trust, there's transparency, good governance, and accountability. Now, what has happened is that confidence in the market is coming back. Confidence in the market is coming back. And I can tell you that for the past 3 years, the stock exchange has been consistent in terms of our performance. Rebounding from the DDP, in 2023, the index returned about 28%. 2024, we returned over 56%, which made us the #1 best performing stock exchange in the whole of Africa. In 2025, we increased the return to 79%, made us #2 best performing in the whole of Africa. And then just currently, our index is returning around 63%. And if you have been following the news, Bloomberg recently put out that the Ghana Stock Exchange is the best performing exchange in the world after South Korea.
Please a round of applause for that.
And so for the past 3 years, it's been a sustained performance.
Yeah.
So that is one. And then secondly, if you have been following the reports on the stock exchange, a lot of the companies are churning out good profits. They are paying good dividends. And then all these things help to boost confidence in the market. You can also see that in the last 6 months, the stock exchange, we have seen an issuance of 3 IPOs within 6 months. And this is coming on the back of 7 years IPO drought. So until last year, December, for 7 years, there was no IPO on the stock exchange. But in the last 6 months, we've had 3 IPOs, with the Casaprec one being the latest one, where they seek to raise about 700 million. There's a lot of interest from domestic and international investors now, and that is what is driving activities on the Ghana Stock Exchange. So this is the story.
That's a very insightful story. Please a round of applause to the Ghana Stock Exchange. I'm sure some of you here already have stocks in your names, and I keep buying by the week. You check the stocks, I keep investing, because where the money is, going, where the market is going. I always tell people on Beyond the Numbers, the best time to invest is yesterday. So you have to decide to invest today. I want to come to Nana Yao. You know, the market picture has been painted that there's a lot of liquidity in the market, but there are also businesses who are always looking for capital. How would you advise a company or a Ghanaian business in how they can position themselves to be attractive to private equity investment?
Thank you very much. Thank you very much. I think we've gotten to a point where, let's say, Ghanaian businesses or owners should be ready to open up, right? So equity investors are looking for businesses that are capable of scaling up, that have a profitable run, and also have a good governance, right? And the challenge is most small and medium-scale businesses start up with the founder mindset, boxing, I do everything, I don't want to open up and give my money to other people. So if you want to attract proper equity investment, when I say proper, it's not some small coins, like proper money that allows you to meet your working capital, be able to expand and everything, you need to have some level of governance in place. You need to have some level of leadership structure. You need to be able to be regulatory compliant, statutory in terms of compliance and everything. And also you need to have a business model that makes money, not just you're doing the business for fun's sake, a business model that has capacity to make money in the next 5 years. Because equity investors are not investing today. They're investing for the next 5 years. They're investing for business that will exist for the next 5 years, the next 10 years. So I'll say 3 things. Your capacity to be able to scale beyond even just Ghana into African markets, your ability to set up a good corporate governance system where you have the right documentations in place, some level of advisory board or a board of directors, and also be a profitable or a business that can be able to actually generate revenue.
Thank you very much. I'll come back to you so that we understand how we can tap into African investment markets shortly. I'd like to come to Dr. Richmond on a very important conversation. People receive salaries, and at the end of the month, they keep saying they are broke. And you have been in the financial literacy space for several years. You have spoken on several platforms. Just this afternoon, one will wonder, what is the leading cause of our situation or somebody's problem in terms of money management, or we say poverty, if an African perspective is going to put it quite well? What is one of the leading challenges why people cannot manage their money in Ghana and cannot literally live on their salaries?
Well, thank you. I don't think it's a Ghanaian problem, so to speak. I mean, poverty is everywhere. You'll be surprised. Just that ours is a little bit pronounced. In fact, if you look at the people seated and listening, you will never associate poverty with any of the guys and the ladies in these fine suits linen. But you'll be surprised that today is June 2nd or something, most of us, our salaries are gone already. So it's rather an institutional structure in terms of financial literacy appreciation. And it is not necessarily a Ghanaian problem. So first, I want us to appreciate it from 3 levels. Financial literacy is not just about personal finances. There is a macro level, there is a meso level, and then there's a micro level. The macro level is at a point where we are able to appreciate what is happening at the country level and its implication or relationship with the global economic dynamics and how it implicates our financial well-being. So how is a regular banker or a corporate executive able to interpret what the trend of inflation is and how it crowds out their disposable income, so that when they see inflation trending upwards, they are able to take a personal financial decision that makes them better off. That is at the level of the macro. Then you come to the meso level where it's institutional, structural. So you understand the entire financial markets universe. So you are able to understand the capital markets. You are able to understand the money markets in a manner that makes you know that the rate of interest on holding your money is zero. And so if inflation is taking even just about under 10%, it is still rendering you negative in terms of the value of your money. So at that level, what do you do with funds you have that you are able to keep for less than 91 days without needing it and still make a valuable return on it so that your disposable income is not left at a point where it is not useful? That is a meso level where you are able to understand that when I have money I need in less than a year, this is where I keep it. And when I have money that can travel beyond 12 months, 2 years and above, this is where I keep it. When I have money that I think that in the next 10 years I need to make a significant investment in a big ticket item in my life, what do? Do I wait till I get a loan, or do I wait till I get a breakthrough bonus at the end of the year? Or I begin taking investment decisions on the capital markets at IPO level, or at a point when everybody is cashing in, I buy when everybody is selling, and I sell when everybody is buying, so that I can make money at that level. Then the last one is the personal level, micro, where your behavior, your money habits dictates what you do. That your decision to buy something or to spend on something is not based on taste, but it is based on discipline. It's not based on what is happening on social media, but it's based on your own budget, and you are guided. This is the ecosystem of financial literacy. And you'll be amazed that until we put all together, it doesn't matter where in the world you live, you will be a product of poverty.
None of us want to. Please, a round of applause for him, please. Certainly, everybody is scared of poverty. Nobody, even when you talk about poverty, people say it's not my portion. But it's not about just prayers. You have to ensure you have that financial discipline to work through that. And that is a very important aspect, which I'm coming to, Mr. Paul Mante. We know sometimes you hear this news, inflation is going down, the interest rate is improved, and people just ask themselves, all to what end? Now, I want to get from you, how can someone position himself in improved macroeconomic numbers so that their portfolio can witness some gains, their investment can see some profit, and basically, what sort of advice will you give either a business or an individual in an improved economic condition?
Thank you. And let me first associate myself to everything that has been said. Okay. And we're talking about the improved environment and what individuals should do, but it's important to put the conversation in context that what we are discussing this afternoon goes beyond an individual. What we are discussing this afternoon is about a certain transformation we want to see in our society. You know, so the individual habit, like Doc said, directly feeds into the economy. As I sat down and the previous panel were discussing, having their discussion, I went on ChatGPT and checked the journey from Accra to Dwaboso, less than 500 kilometers. The last time I did it, I used about 12 hours. And here people do 10 hours to Kumasi, 12 hours to Kumasi at the moment. Meanwhile, the other places you can travel and do 4 times that journey within that same period. So the point I want to make is that even though we're talking about individuals, it's important to put it in context that it feeds directly into the country. What should individuals be doing? Individuals should look more long-term. You cannot build wealth sustainably with the 91-day mentality. Let me repeat that. You cannot build wealth sustainably with the 91-day mentality. You want to do 91 days, and people are used, you do investor education after explaining so is it like the 91-day treasury bill? Because the whole mindset is a 91-day mindset. If we want to build wealth sustainably as an individual, within whether there is stability or not, people still make money. In the bad economy, people make money. In the good economy, people make money.
Hit that again. That's very important.
Yes. In a bad economy, people make money. In a good economy, people make money. So the only way to make money is to keep making money. Whether the economy is bad or the economy is good. So let's look long term and understand that the journey for the individual to create wealth and gain financial freedom is not a sprint, it's a marathon. So let's stop, and it's the reason why people are losing money, because people want to make money overnight. You cannot make money overnight sustainably, maybe short term. So let's think 5 years, 10 years, and when you talk 15 years, 20 years, people think that it is far, but it comes overnight. I mean, over the weekend I was talking to a group and I was telling them about the 2000 election, because it was an unprecedented election under the Fourth Republic, but we are in the 26th year already. So in the stability we are seeing ourselves in now, people are complaining treasury bill is slow, but there are always opportunities. The stock market, there are opportunities on the stock market. We have Balance Fund that is doing very well. So talk to professionals and let's take this conversation about building wealth serious. Maybe let me conclude by saying that I was also comparing one company in the USA, Walmart, and I was looking at their revenue for last year, 2025. When you look at the revenue of that one company, it is more than 2 times the GDP of 30 African countries. And 30 African countries. There is poverty everywhere, but the levels of poverty are different, and we need to elevate our level a bit. When you look at the GDP of one state, California state, it's more than the GDP of the African continent. The conversation we are having this afternoon, and I'm happy EcoBank is associated with it, this is not about competition. It's not about EDC, and it's about our collective interest. It's about national interest. We cannot do well in a decayed environment where people are poor, where people are not doing well. So let's go all out. Let's take the conversation around investment serious, and let's be committed to doing this until we get to that level. Thank you.
Thank you. Please, a round of applause for Mr. Martin.
There are levels in poverty, and still there are levels in riches. What level do you want to go? Or where do you associate yourself with? It's all about perspectives, and let's always make sure that we elevate the conversation to a higher dimension. Sometimes I always say comparing something is a thief of joy, but if you know
have about 108 billion in assets under management. And we need to make sure that this engagement continues so that these monies will be channeled through the right productive sectors that can help this economy to grow. Because if you look at what is happening in other countries, pension funds have really played very crucial roles in driving the growth of a lot of economies. And so I think what is happening now is good. A lot of the IPOs that have happened, it was actually the pension fund managers who have invested so much into the IPO of First Atlantic Bank, Zim Petroleum, and what is currently happening, the Casa Preco. A lot of the pension funds are investing, and it is good for us so that they move their focus a bit away from only the government securities and invest in areas, the real sector, so that these companies can grow, expand, and create jobs, and then the economy will see the benefits.
Thank you, Jerry. Let me come to Nanaya. Nanaya, interestingly enough, there are a lot of businesses that always say our number one problem is access to capital. What mistakes do these businesses do that is limiting them from having foreign direct investment, or let's say foreign investors, if not local investors?
Well, there are several in terms of mistakes people do.
Yeah.
You know, the typical, I will not say Ghanaian alone, the typical African is very possessive, you know. We like to be 100% ownership. And even when we want to get foreign and direct investments, you know, we are afraid of giving part of our equity to the shareholder. But there are different dynamics to it. And
they don't want to share the CEO title.
Yeah, and I think also because we are very royal and very proud people, we don't seek advice, right? So we don't get professionals to guide us. You know, we want to let everybody know that we know. But one of the things, the biggest mistake, people want to get more grants than get like proper investment and run the business properly. So when they send, let's say, a request to venture capitalists or angel investors and all those kind of things, you know, they try to make it look as if, come and help me. Just give me something small so that I can run my business. So I think what we should do in terms of businesses is that we should focus on a business is set up to make profit, right? So we are running a proper organization. Let's institutionalize the business properly, like what I said earlier, right? And then have a proper pitch that defines the progress the company will make from a profitability perspective, not just from a growth perspective, you know. There was a time, I come from a fintech background. This time, you know, fintech boom, we used to do a lot of pitches. You say, we have 20 million Ghanaians. If 10% of them sign on to our product, we charge $1 per month. We'll make $2 million per month. But, you know, we've gone out of that startup bubble, right? We are now in a serious period where people are looking at what are the numbers, what are the people you are recruiting, how are you treating them, what's the corporate governance, you know. Do you have financial statements? Are you compliant to government dynamics? So instead of just focusing on just getting some small money or grants and those kind of things, let's properly put in the documentations and apply to, the money is there, both locally and then foreign. People are looking for places to invest. He just mentioned that 7 years ago they didn't do any IPO. Within 6 months they've done IPO, and I think the stock market is performing, so it means money was somewhere. Right, so there's money there. But sometimes I think we don't put the right documentations in place. We don't do the right things and speak to the right kind of people to advise us to seek some of these investments. Yeah.
Thank you very much. After this second round of questions, I'll come to the audience for various questions and take your thoughts as well. I'm sure my panelists here are here to address every concern you have, from investment to how you can run away from poverty. Or open for all of us. Let me come to Dr. Richmond. You know, the issue of financial literacy is a very dire one. Some even are proposing that it should be inculcated into our curriculum from our childhood years when we're growing up. But you get to a point where you've already grown, now you have money, you don't know what to do with money. In this instance where fintechs have come to light, how is financial literacy and the fintech collaboratively can help an individual or an organization advance their investment portfolio?
Right, so first,
yes,
foundationally, anybody who is interested in doing well financially must understand the 360 degree of the financial services universe. You know, in my first point, I talked about the financial markets, understanding the capital markets, and understanding the money markets. Now I'm talking about financial services universe because the financial services is what powers the financial markets, and the fintechs plug into that. So when we say financial wellness, ordinarily your mind goes to investment. And when we say investment, many people would just associate investment to, like Paul said, maybe fixed income. And fixed income from a regular bank or fixed income from a savings and loans, among other things. But you must understand the whole financial services universe. You must understand banking and the role it plays. You must understand insurance and the role it plays. And then you must understand investment, which is asset management and the role it plays. Before now, you can understand pensions and the role it plays. And for anybody who is looking to doing well, particularly at the level of financial literacy where the fintechs can plug in, we should be able to let these 4 anchors work for our good. So that in the banking system, you leverage on banking in a manner that makes you better off. But you don't treat that same understanding the way you treat an investment kind of product. So when you come to banking, you should be able to understand what exactly it is you are making from the banks. Are you on the side of taking money from them, or you are on the side of depositing so that you can leverage on any money you keep there? If you don't utilize the two, you are not going to enjoy the benefit of financial wellness from the banking system. And you always be at the end where you are only taking from the bank as debt at a rate. And now you can tell the rates are going down. So there is a way you can leverage on the banking system and cash in on debt that is cheap, that you can turn around to make you better, in as much as you are looking forward to putting money there. Then you move from that and come into pensions, and you must appreciate that as well. Because when we say pensions, for many people, it is just maybe the SNIT we know. And until lately, with the education and things, we have come to appreciate tier 1, tier 2, tier 3, and the role they play in our lives. But how many people even pay attention to what it is for tier 1 and what it means to us? Whether even the contributions that are going from our regular monthly payouts by statutory requirements are going the way they should go, and whether you are hitting the minimum contribution mark, so that when you set out and you leave regular work, you know that this is the benchmark I'm going to receive every month before I'm called out of the earth. Many don't even check. We don't even know how to assess that and to check whether the payout and the contributions are going the way they are supposed to go. Then we come to talk about tier 2 and tier 3. The tier 1, tier 2 are mandatory. The tier 3 is voluntary, but there is a place in the tier 3 where personally you can also cash in on your personal pensions and make a certain contribution that adds up to your lump sum you receive in tier 2, and also adds up to the regular you'll be receiving from Senate on the tier 1. That understanding must also be there. Then finally, insurance, before I come to investment, which I'm sure Paul will speak to. Many people feel insurance is not, in code, a form of financial wellness product, but it is. In fact, if you think about insurance and you think about it in a manner of a safeguard against a potential risk, then you don't need to be caught on the road before you pay attention to general insurance, or you pay attention to life insurance, or you pay attention to health insurance, among other things, and how you can cash in for it to be beneficial to you. Then the last one is the almighty investment we know, and the challenges we have gone through in the couple of years that have gone by, and how now we are cashing in on the capital market, which is the stock exchange, and then the money market, and of course collective investment schemes, where Paul and his team are also driving a lot of advocacy. It is when we put these 4 together at the individual level and it's institutionalized, then the fintechs can plug in. So when I have a Momo account, I am not just looking at leaving a transaction that I can benefit from paying money from one item or the other, but I can cash in on any CD that sits on that transaction.
Please, a round of applause for them. I like the way the cameraman has been paying attention. So if the cameraman is really paying attention and taking notes, how much more you have to take notes. Because this is information that you may not get ordinarily on the platform. The best institution to do that is BNFT and EcoBank bringing you this amazing conversation. Please, a round of applause to them. Wonderful. Now, Paul, interestingly now, we know that the informal sector is a large section of Ghanaians. That has been one of the bane in how to bring them into the basket. Some years back, I did a feature. I went to Mokola Market, and I was speaking to a tomato seller, and one of the queens. And when she was telling me how much they make in a day, I automatically told her, "Pacho, send me your PA. I want to come and work for you as a PA because they make money a lot. They make a lot of money, and their consistency and how much they save per day in their banks, in their savings account. You see Susu collectors coming day in and day out marking. I just want to understand from you as a fund manager, what strategies or products would you say can be easily made to attract them into the financial basket? Because these are areas that the financial market has failed to tap consistently, and they are the strong market movers consistently in this country. What can we do?
To bring them in.
Yes.
Because it's important to bring them in. You see, Jerry mentioned that our pension book, and we started not too long ago, the pension book is over 100 billion already. How much did we get from the IMF for the IMF program over 3 years compared to our current pension book? Okay, but how many people are contributing to the pension? I was just checking, and the figure I got was about 2.1 million. In a country where you have those between 18 and about 60 years being close to 20 million. So you have a small group of people contributing to this over 100 billion we have in pensions. If we can bring the informal sector guys on board, and you are right, they earn more than us. We just wear suit and tie.
I saw you.
Paperweight.
They wear one cloth from morning to evening, but when they lift their clothes, the amount of CDs you see.
I'm telling you, these guys have a lot of money. If we can bring them in, it will be a major game changer. How do we do it? And that is where the conversation around financial literacy comes in. We must be interested in going to the market. We must be interested in going to the churches. The churches must be interested in the campaign. The mosque must be interested in the campaign. We must not be interested in only collecting money. We must be interested in how people are making money and encouraging them to make money so they can live decent life. And let me repeat, the levels of poverty is worrying. I mean, now you drive in the morning to work, and in 2026, you still see people carrying water on their head in the morning. You see people queuing just to board Trotsky. They've gone to work, and just to get home is a problem. But the way to unlock this capital is to get into the informal sector, bring everybody on board. So as people contribute to the formal sector, there is a way this money is rechanneled to help with things like infrastructure, among other things. I'm excited about what is going happening on the stock exchange. I have some investment on the stock exchange. But one of the questions I've also been asking myself, what is the distribution like between investors, local investors, Ghanaians, and the foreigners? Is the stock exchange booming, but are we making money for foreigners rather than Ghanaians? If we don't put money on the table, the foreigners will put money on the table, and they will make the money anyway. So we need to get into the market, the radio stations, the television stations, and I'm happy about what BFT and EcoBank we are collaborating to do. It's not about a company, it's about collective interest. Else people will keep sacking us to go back to our country to fix it. And we have our young, energetic people getting onto the desert, people taking major risks, people are dying. And it's a serious conversation we are having here. People go, they don't come, they die. Yet still people decide to take the risk because in their mind, the taking that risk and not coming back is better than the poverty I am in. And we need to collectively come on board, get into the market, go to the churches, go to the mosque, go to the schools, to the university, and contribute to financial literacy and bring people on board. And that is what we are doing as a company, as EDC. We go around, we talk to people, and we have products. We have a balance fund. You can do 20 CDs. We have products you can use 50 cedis to start. And these are products you can use Momo. Anytime you have some small money, you can move it. You can get on the app and all that, just to make it easy, so that people can conveniently come on board in our collective interest.
Thank you very much. Please, a round of applause for my panelists. So many information has come forth from my panelists this afternoon. And for that reason, I'm going to give you the opportunity to also either make a small submission or have a question, which will certainly be addressed here. So just lift up your hands. The microphone will come to you. You just mention your name and please go straight to your question. Please make it brief as well. We don't want long guesses. Thank you very much.
Ambassador Francis Wuskobia is my name. Mine is a contribution. The first one goes to the banks. Anytime they are doing a graphic design for agricultural products, you see a farmer with shirts open and some old hats. But when they are developing a product for investment, you see a fine executive man in his suit sitting in a comfortable chair. The question I want to ask the bank is, those who go to the submarine, those who go to Obuasi mines and the pilot in the space, all of them at the end of the day, what do they eat? Even those who are mining good, do we eat good? We come back and eat food. So if you want agriculture to be beautiful, like how we describe it in the rooms like this, they should protect the farmer very beautifully for the young people to be attracted, not a farmer with a shirt open and old hat, which makes them dirty. Like when we were in school, they say when they want to punish you, go and weed. And finally, I want to say...
Please, you said just brief one, so I think that will help. Thank you very much for your input. Please, the next person. Let's make it brief because of time constraint.
So my name is Theodore Lawson of e-commerce GH. Now I just want to say a contribution actually. One of the ways in which we can bring in the informal sector, today we all have an ID, okay? With an identity system in place, Ghana card, we should encourage agency models that happens in outside countries, where laborers, maids, house helps are all registered. Even though we can be tracked as individuals, our value transactions are not being tracked. And that is why we are not even attractive to the banks. And so poverty will still run down there. And we call them informal. Why the name informal? They're just informal because they are not organized. If we can turn that informal into just not organized, we'll find a way to organize them, and poverty will be eradicated. Thank you very much.
Thank you very much, too. There's one, okay.
Hi, my name is Solomon. My question goes to the man at the stock exchange. I want to first congratulate you on the good job you're doing there. But my question is, considering the fact that Mr. Manti was lamenting about poverty levels here and income levels, but you have a lot of Ghanaians living abroad. When do you envisage a situation where Ghanaians abroad or anywhere else could just log on to their computer and into any brokerage firm and be trading on the stock exchange? I remember about 21 years ago when I was in secondary school here, I used to come to the stock exchange, and it was more of writing on the chalkboard on the board. I don't know if that's what they still do, but when do we advance to a level where Ghanaians anywhere will just log on to their laptop and be trading on the Ghanaian stock exchange and be buying stock so we can have a large pool of resources from abroad? Thank you.
Thank you very much, too. Last one, then we come back to answering. Okay, I think, all right. I think yesterday or 2 days ago, I heard the governor of the Bank of Ghana indicating that that is one thing, that is when he was speaking with the diaspora community. Already the diaspora bond is one avenue that they want to hit, and also creating speaking with the banks to create a product of that nature where they can invest in our domestic economy. And that is what the governor himself reiterated. And I'm sure it's a conversation that is ongoing behind the scenes. So I'm speaking based on information I know, so hopefully we'll get to see that going forward. Someone with the microphone?
Yeah,
okay.
Thank you. My name is Edmund. My question goes to Banahini. Banahini, based on your personal experience and what you've gained so far, what strategy do you think can be used to change the mindset of Ghanaians from sole proprietorship to partnership? Thank you.
Thank you very much. So I think let's start with Banahinin, then we come to the stock exchange, since he was the last one.
In terms of mindset change, I think one of the things we talked about was building trust. I think it's been a matter of trust and a matter of security. And for me, it's more of understanding what you are capable of and what you're not capable of. If it has to be personal partnership with another person, you look at, for instance, you start up a business and you need a very strong CFO, a very strong CTO, and all those kind of things. Some of them, because the salaries are high, you can negotiate and pay a salary you can afford and give them some level of equity. As I said, there's a challenge, there's a mindset challenge where people don't want to, open up. People don't want to give up. They have the 100% mindset. And it's not something that, it will go away immediately. There should be some level of intentional social marketing or something, or deliberate way of getting people to understand that if you want to grow, you have to collaborate. If you want to grow, you have to open up. We talk about all the big companies in the world, and nobody owns it 100%. Even SpaceX for Elon Musk are going to be listed very soon, right? They are going to go public. So every company in the world that has succeeded is not just one person leading it. There's always a partnership. Even Dangote is listing on stock exchange, multiple stock exchange. So it's a mindset issue that people have to come to the understanding that there should be a time where you need to build some form of trust and open up for the purposes of growing. 100% of one city is nothing compared to 10% of $1 million. So if we start building this kind of information from the perspective of financial literacy, I think we'll get to the stage where people will now trust more and collaborate.
Please a round of applause for him. To add to it, I recall listening to Dangote. He said before he started a refinery, if he had seen the plan before they started, he wouldn't have even begun with a refinery, because he understood that he cannot do it alone. So partnerships help him get to where he is now. So the biggest refinery in Africa, possibly in the world, is because of partnership. And so collaboratively, interests must align for that to succeed. You can't just say you want to partner with someone because it's growing. What do you bring to the table? That is a very big conversation there. Now, Jerry, there was a lot of conversation and interest in the Ghana Stock Exchange. First of all, how do you address those?
Okay, so thank you very much for your question. So your stock exchange, my stock exchange, our stock exchange is for Ghana. So what has happened is that since 2009, the exchange was automated. So as we speak, since 2009, all the traders have been trading virtually. So when you come to the trading floor, you will see people writing with chalk on the board and all that. We've gone past that since 2009. That tells you how forward-looking the exchange is. Now, I think the issue about digital platforms to increase participation in our market is really coming up very strongly. We also had a recent engagement with the diaspora, which was organized by GIPC. And that issue also came up strongly, that if I'm the diaspora and I want to access the market, which digital platforms are available? We currently have some digital platforms available. We have the one by IC Wealth, that is a Trade Life. We have Blackstar app, SC Mobile from StanChart. We also have CD Manager from FinCap. And I think EcoBank too, you are trying to incorporate it or something. So some of the companies have it, but it looks like we need to promote it more, because now there's a huge demand for digital investment platform, especially from the diaspora. And that is one of the means by which we can get a lot of people to access the market. So as I'm sitting here, I've been tasked by my boss to make sure I collate all the ones we have, and we also help in our way by promoting them on our platforms so that people can go and use this platform to do any investment they want to do. And I'm happy it came up at the Ghana UK Investment Summit. So it's something that there's a huge demand for. So it's up to us market players to make sure that we introduce a lot of these apps and these web portals so that investors can use them, because nobody will have the luxury to walk into a stockbroker's office or whatever. This is the way to go. And I think we need to act very fast so that we don't lose that side of the investment. Because we need the diaspora not only to remit money for consumption, they need to remit money for investment. And we have to create the platforms that they can use to access those things.
Great. In concluding, what is your any message from the Ghana Stock Exchange before we go?
Well, I think the market is open. We are ready. The stock exchange is the market for capital. So if you need long, patient capital, please, the stock exchange is the destination. We provide long-term, patient capital. We have 6 markets now. In the last 4 years, we have added 3 more markets. We have the main market, the Ghana Alternative Market for SMEs. We have the over-the-counter market for unlisted companies, unlisted public companies. We have the commercial paper market, where you can issue a commercial paper for between 15 to 270 days. And we had FEDCO recently issuing a commercial paper. That was last year. And it was very good. And we also have the green and sustainable bond market, which is also a market that we are yet to see an issuer on. And they also have the corporate bond market. And so we are encouraging everyone. I want to end by talking about the beautiful story of Casapreco.
We'll get to Casapreco another time. We'll get Casapreco another time. Thank you very much, Jerry. And I'll briefly before we go, your final words.
Thank you very much. So I think my final words is that we should focus on building in the company, focus on building, institutionalizing the process of the company than just building an enterprise. You know, building systems than just building like personality, CEO, founder, and all those kind of things. And also being very data-driven and revenue-focused.
All right. Dr. Richmond?
Final words, it's you. Pay attention to your own financial wellness. If you slap 20 years to your age now, and you don't have to work like you are working to earn income, can you still keep the same level of lifestyle? If you can't, pay attention yourself, own it yourself. Take a decision today that makes you better. And through this platform, we are going to issue out something you can use to do a diagnostic test of how well you are right after here. If you are interested, you reach out to the BFT guys so that it can give you a scope, almost like you go out of a lab and it tells you whether you are well or not. And immediately, middle class people, they are in suits, but they are sitting on fire. So you can turn around the tide in the next couple of days. Thank you.
All right, Mr. Mate.
Well, I will conclude by an important question I asked myself the year 2006. And I need everybody to ask yourself that question, and even our audience. If you didn't have to work from today, 2nd of June, 2026, for how many months, how many years can you live your normal life without salary? If you can't do 1 year, you need to see a financial doctor. You need a surgery as quickly as possible so you can come back on track. Take note, I have some friends here who are looking at me some way because we've had this conversation. They have not acted yet, but Jesus is Lord. You are already at the crossroads. You have a life-changing decision to make. Will you create the financial future you want, or you will take the one that shows up? If you don't create what you want, you won't like what shows up. Thank you.
Thank you very much. A round of applause for my panelists. My name is Winston Taki, and I had the privilege of moderating this session. Thanks to Mr. Paul, Dr. Richmond, Nana Yao, and Jerry. Please, a round of applause once again for them.
A round of applause for Winston. That was a good one. I wanted to slap 20 years on my age and see, but my calculator is not working. It's not my fault. So we have the panelists take a group picture, and we move straight to the last plenary session of the day. After that, we close and we have lunch. So it's going to be exciting as this one as well, and very brief as this one as well. They are going to be speaking on the topic, deepening financial inclusion, the strategic role of rural banks in Ghana's economic transformation. Financial inclusion continues to shape economic participation, enterprise growth, and access to opportunity. This session explores the evolving role of rural and community banking institutions, digital transformation, SME financing, regulatory reforms, and inclusive financial growth. Moderating this session is my very own colleague, Mr. Ebenezer Chike Eje Njoku, of the Business and Financial Times. A round of applause for him. Over to you, Eben.
Okay, thank you very much, Juliet, and good afternoon to all of you. Okay, I can tell by that response that, well, people are not hungry. Okay, so as mentioned, my name is Ebenezer Chike Eje Njoku. It's a mouthful. It's a West African paragraph, I'd like to put it. We'll try to be brief because whilst we've saved the best for last, we know that we are sitting between you and lunch, and we wouldn't want to overstay our welcome. However, I must admit that this is, without any bias, the most important and would be the most interesting of the sessions. If I were to ask you, now if there was 100,000 CDs on the line, and I asked you what the role of community banks were, what space they occupy in the nation's financial ecosystem, how many of you would be able to respond to that? For $100,000, a hypothetical $100,000, how many of us, by show of hands, can tell us what role community banks play in our financial ecosystem? How many hands? Oh, nobody wants a hypothetical $100,000. Okay. Well, we will be answering that and other questions under the topic Deepening Financial Inclusion, the strategic role of community banks. Notice I'm calling them community banks, not rural and community banks, and we'll see why shortly in Ghana's economic transformation. And to do the honors, in no particular order, but I think perhaps I have to give due regard to the overall regulator. First off, Mr. Kingston Oklu, Assistant Director and Head of Community Banks, formerly RCBs, of the Other Financial Institutions Supervision Department of the Bank of Ghana. A round of applause for him. He's a big man. Juliet, just please note to those who are not clapping. We'll reserve their lunch. Okay. After that, we have Mr. Samuel Jima Amwaku, Head of Finance as ARB Apex Bank. Samuel, please welcome him. We also have Dr. Alex Asma. He's the CEO of Amenfiman Rural Bank. A round of applause for him. We also have Alhaji Hayatuddin Awudu Ibrahim, also the CEO of Besfar Rural Bank. A round of applause for him as he comes up. And then finally, but surely not the least, Desmond Bredu, Head of Client Coverage at Stanbic Bank, Ghana. A round of applause for him. Okay, so to set the ball rolling, we would like to answer that question. What exactly are community banks? And that which has historically been called rural and community banks. Perhaps we'll just start off with you, Hayatuddin.
Okay. Thank you very much for this wonderful opportunity. So to begin with, rural and community banks, I think it's a group of currently about 147 independent companies, autonomous companies that have started over 50 years ago. Somewhere in 1976 was when the first rural bank was given birth to, and it came out of a deliberate policy from the regulator then to find out or provide a financial system, part of the ecosystem that would provide or they would serve the needs of largely the unbanked communities, people who are in the hard to reach areas in our various communities. So you would find out that to date, we have close to 800 network branches of these rural and community banks operating in local communities where most of the universal banks would hardly be able to reach. And then they are providing essential services such as fund transfers, mobilizing deposits, which is being used to invest in these same communities to ensure that we're able to grow these communities by deepening financial inclusion, help actually elevate these communities and the people living therein out of poverty. So by far, this is largely what rural and community banks are, and then this is what we've been doing in the last 50 years.
Doc, would you like to add to that?
Yes, yeah. Yes, I would like to add to that. When you talk about community banks, we are basically looking at, I'll call it the most trusted financial inclusion infrastructure in our country. The institutions that provide access to financial services, access to credit services, to the sector of our economy we call the informal, and you know that that size is about 70 to 80% of the size of our economy, and that is where the commercial banks are not able to provide the service to profitably. Because for a commercial bank to go all the way to that level, they will end up providing the service at a loss. So you see a lot of commercial banks move down to some rural communities and they fold up. Why? Because they could offer the service, but they have to do that at a loss. But for community banks, because it's owned by the community, it's trusted by the people, we operate among the people, and therefore we are able to understand the people and deliver the service to them in a way that can still be profitable and beneficial to everybody. So that is basically the community banking in Ghana. And it has evolved. 50 years ago, it was experimental by the Bank of Ghana itself setting up Nyankrum Community Bank as a test. And now it has evolved over 50 years. 850 network branches, providing access. 8.3 million people, Ghanaians, are having accounts with community banks. So that's a huge thing. And so we're talking about 2.1 million people on pension, but we're talking about 8.3 million people receiving access to financial services through community banks. So basically that's what it's about.
I think it goes without saying that community banks are some of the most important vehicles regarding financial inclusion. But we hear of this ARB Apex Bank. Again, if I were to ask with my hypothetical, maybe this time I make it $200,000. How many people can tell what exactly the ARB Apex Bank is? How many takers? Or should I get that to 300,000? Okay, so we'll have Mr. Mwakun speak to us on what exactly the role of the ARB Apex Bank is.
Right, thank you so much. Let me just explain the question you asked them, no one answered. ARB Apex Bank. The ARB is the acronym for Association of Rural Banks. And then Apex Bank means we are sitting at the top, not superior, but we are in the same industry. And I'm just complimenting Bank of Ghana in supervising the rural banks, now community banks, the definition that has been given, so we know who the community banks are. Now, what is the role? What are we doing here? Why ARB? It is needed because from the story that was told when community banks began, 1976, about 20 years down the line, our 110 rural, community banks, then rural banks had been established. However, but 23 of them had gone down already, which means there were issues on the ground. Some external, some internal. External ones, there was no control. For example, road network and stuff, you can't do anything about. But what about the internal ones, where we have weaknesses in governance system, internal control system weaknesses, and then lack of the required skill set of personnel to work for the banks. So all these problems were causing these issues were causing problems for the community banks. So there was a need for institutional intervention Then Apex Bank came in to provide solution to these problems so that we can have trusted institutions, as Alex said. Now you can really trust on the rural banks to provide these services to them. So Apex Banks has dual role. One being the supervisory role, complementing the work of BOG or Bank of Ghana, and then the banking and non-banking services as well to the community banks. So for the supervisory roles, we do inspection, ensuring that they prudently manage the resources that have been entrusted to them, offering training and capacity building, empowering the rural banking system. And if you look at the history, when rural bank was set up, then we had about 90% of the rural population living as unbanked. Now, as we speak, the story tells us that it's about 30% unbanked, which means that we have gone far, and we are still going far for the presence of ARB Apex Bank. And for the banking and non-banking services, we have account for the community banks. By regulation, they are supposed to keep 5% of their deposit with us, which is sitting with us. We are using it to operate and also serve them. Then we have technology where we are all sharing common platform, for which before it wasn't in existence, which was causing problems for them. And then when it comes to stability, all right, which also aligns with the topic today, but for the existence of Apex Bank, the financial sector cleanup, none of the rural banks was touched because the confidence was there. We knew what we were doing. We had already categorized the banks, and those who had problems, where we had specific solutions that we were giving to them. That's why none of them was touched. So if you look at the history up to today, 50 years down the line, and now BOG calling for reforms to bring all the other sub-states into it, that confirms the evidence and then the success story of the structure of Apex Bank and then the rural and the community banks, now called the community bank. So that is the role Apex Bank is playing between the community banks and then the BOG to ensure trusted system for the people at the rural areas.
Thank you very much. The dual regulated segment of the economy. Mr. Oklo, I'll come to you shortly. But Desmond, just a few thoughts.
I wanted to add up. So you see, a key part of what the community banks play and the Apex Bank play is financial inclusion. And so I'll speak on, as somebody who works in the asset management industry, how that plays out. Because when you talk about financial inclusion, it's not only about having access, but is it making their lives better? And so through the whole arrangement, somebody, wherever they might find themselves, can get to invest, for example, at Stanbic Investment. And I get to see that on a daily basis that through the Apex Bank, transaction becomes easier. You're able to deposit, you're able to withdraw, and then they get credited to your account wherever they find themselves. So a key part of what they do is financial inclusion, and that's where Apex Bank plays a key role in doing that.
Thank you very much. But Mr. Oklu, just for very basic education, why do we have this arrangement where there's the Bank of Ghana, there's the ARB Apex Bank, and then there are the community banks?
All right. Thank you very much. Before I make my submission, I was surprised when you asked the community bank questions, and it looks as if in the House, people are not aware of what a community bank is. And I was thinking, if you are not aware of the community bank, are you aware of rural and community bank? If you knew about rural and community bank, then it's the same thing that we are now reforming to become community bank. So that is what it is. But I have to also send greetings to my boss, the governor, and my head of department this afternoon for the opportunity given. Thank you very much. So, Mr. Moderator, your question. Yes. Years ago, around 2000, there was nothing like Apex Bank. But you know, the system is evolving. It's always evolving, and Bank of Ghana is always researching into other jurisdictions, comparing our system. So at a point, it became necessary that we have to have the Apex Bank. So that was how simply the Apex Bank came into being, and that we gave them some delegated assignment, delegated function, which they are performing. So that in the community, we are able together manage the banks accordingly and expectantly for the banks to operate and operate well. Thank you.
Thank you very much. Now, like you've said, these community banks are all across the country. A lot of them are in what would be otherwise hard-to-reach areas for many commercial banks. However, we know the realities on the ground. I was tempted to make allusion to something, but I wouldn't. A community bank, for instance, in the Ashanti region, might be operating under significantly different conditions from one, perhaps in another part of the country. Does your current institutional and regulatory framework serve both contexts well enough? Or does it inadvertently favor one over the other? We know that this is an issue. So, well, perhaps we'll take it from the regulator, and then we'll come to the men on the ground.
Thank you very much for the question. And then also the practitioners are here. And so we'll put the whole question in perspective. The framework, Bank of Ghana framework, is not segregating the banks or putting them into tiers, that if you are in this region or that region, this is your rule, if you are here, and this is your policies. No. We have one policy, one act, one directive. Everything that we have is one. I don't know why you compare Upper East and Ashanti, but I can tell you for sure that there are banks in the Upper East better than banks in Ashanti. And even in the Ashanti region that you mentioned, the banks are not on the same level. So it is not something that we can do, but what they can do as a bank is that this Dr. Hasman has the biggest of the community banks. We also have a smaller community bank elsewhere. When you put the indicators together, what we use to judge the banks, regulate the banks, they may be better in terms of condition than his bank. But his bank is the best, is the biggest. So whether you are in the Upper East, West, North, or Greater Accra, the conditions and the directives and the acts is the same.
Okay, thank you very much, Mr. Oklu. I think someone was clapping for Doc. The clapping subsided. You can continue clapping. So Doc, we know that the framework is objective, but on the ground, how is it?
Thank you very much. Okay, I think I can relate to what Mr. Okru just said. Standardization is very important. Regulation without which institutions such as financial institutions can survive. So it is absolutely important that standards are there, capital requirements are provided, governance systems are directed, and all of that. But just like you said, practically on the ground, so imagine a community bank somewhere in Upper East. I don't know which community bank you're imagining. Looking at that community, when you call for capital locally, because remember rural banks are community owned, and that's where the trust is built. It's not owned by any single person, it's owned by several people from the community, living both within the community and outside the community, largely. And so you call for capital from such a community bank where nothing is happening on the street. People are basically peasant farmers. And you say that they should have the same capital requirement, just like, let's say, my bank, because you refer to my bank. You know, it's not discriminatory, but it's practically difficult for that to happen. So in my view, standards are good, but when it comes to implementation, I think we should look at a bit of variation in situations where it's very difficult, because right now the Bank of Ghana is implementing a new framework that framework requires a capital requirement to be met by 31st December this year. And there are, other issues that could happen. So imagine that there are no partnerships around to raise that capital, then the people there could be deprived of those opportunities. There may be safeguards that the Bank of Ghana may have to mitigate that. But I'm just looking at your question and the practicality. That, yes, I can relate with the fact that somebody could walk to my bank and deposit 100,000, but maybe a bank somewhere in the Upper East region, throughout the whole year, nobody works there to drop 100,000 as a deposit. So their circumstances could be different. And so in terms of regulatory implementation, some kind of variation, some kind of safeguards, some kind of interventions, some capital planning arrangements, some support and other things could help to make the level playing ground for all of them. Yeah. That's my perspective.
Mr. Gould, I know you want to respond to that, but please let me bring in Alhaji. This is between both of us.
So I want to associate myself with Doc in the sense that, yes, regulatory-wise, it is very difficult to say that you should have one regulation for one institution or one tier than the other. But when it comes to implementation, I believe we can give some leverage that, okay, within this period, ABCD banks, looking at your size, looking at your category, you can be able to achieve this within this set period. Banks, this and this and this can happen over a period, maybe longer than doctors' banks, for those banks that are within the lower tier. I believe this is the angle from which we are coming, such that the regulatory rules are not seen to be stringent and then making it very difficult for the institutions to be able to operate. And in that case, always and always you see that the same regulator will be flagging these things when it comes to on-site reports, which ended up to also come back to hit the same banks because you are missing one or two areas which the regulator insists you must have. But practically, it's somewhat, let me say, impossible for you to be able to achieve within that short period. Take, for example, the current reform. All the banks have up to 31st December to meet the requirement. But we have some banks that, for all intent and purposes, practically, they may need more than the 9 months since the announcement. So what happened? Immediately after 31st December, are they closed down or what? But even if they are not, but it is on paper that you are what? Not complying. And anything can happen. I believe that's the angle from which we are coming, which I believe it gives a level playing field looking at the strength and the capabilities of all the institutions when we put them in aggregate. Thank you.
Thank you very much. Now, Mr. Okulu, we are now firmly in your court. So, reforms have been mentioned. 31st December has been mentioned. Community banks versus rural and community banks have been mentioned. Please take us through the reforms that are going on in this segment, and then perhaps you might want to respond to our practitioners here.
All right. Thank you very much, Mr. Moderator. To begin with, banks or banking is regulated. So there have to be do's and don'ts. As far as our policies are concerned, we have to have a minimum capital. We are not saying that if this is the minimum, if you think you are big and you are going to take bigger risk, don't increase your capital. That is not our point. It is the minimum that we have set. And that minimum is where you are starting from. And that is what is going to cushion you, because you are going to take a lot of risk. Unless you don't want to. You want to mobilize and go and put it somewhere in a risk-free investment, then that one, yes. But once you have to give out credit, you have to take all this risk, we have to have a minimum. That is the minimum we are requiring them. As we speak, if you look at the asset size of Amenfiman Community Bank, as compared to the capital that they are not proportional. They are different. So if such a bank could increase its capital to some level, why not? That is what we want as Bank of Ghana. But we can't say that because you are in WA, you bring 1 million. And because you are in Western region, bring 100 million. If that is what we are going to do, then looking at the catchment area, when we segregate it, they will complain again. So we have to set the rule basic for everybody to follow. Now you ask of the reforms. Yes, the reforms is also meant to strengthen these banks. It's meant to make the bank resilient. They have to be robust enough. And in fact, they have to be big to be able to meet the needs of all the communities. So the main agenda and the main purpose of the reform is to make sure that, yes, capital level is increased. We are saying the capital for 1 million for now is being increased to 5 million if you are already in operation or in existence. However, if you are now coming to join the community bank, you need 10 million. That is as simple as that. So the reform didn't start yesterday. This thing has been on paper for over 3 years now. It's just that now we have to implement it. And that is why we are doing what we are doing. Now we are engaging the community. If you haven't heard of the community bank, we will come to your locality, we will come and engage you. Whatever question you have to ask. And then also, this community bank, when we mention the community bank, it's no more something like those in the forest zone or some isolated. No. There are people here in Accra, even East Legon, they don't have an account anywhere. And that is why we are saying that those of us sit here can come together and form East Legon Community Bank. So the community, the definition of a community for now is not restricted to East rural anymore. You can be anywhere, come together and form a community bank just to make the financial system solid to meet the needs of the communities. Thank you.
Thank you very much. Absolutely. I was coming to you.
Yes. All right. So let me just add to it because you asked of the update, how far. I mean, he has given the background of the whole reform. Now, I spoke about the Apex and then the community banks. Now, the model has really worked perfectly. Then, if you look at even the Supreme Banking Act or the law guiding bank, we have banks and specialized deposit taking. So we have the banks, which are the universal banks. And then the specialized deposit takings are the rural banks then, and then the other savings microfinance. So we are bringing all of them together. Now we have 4 tiers. Tiers, not that one is superior than the other, but focusing on the market based on the characteristics of the market and then the business model. So for rural banks, now becoming community banks will be one of the tiers. So by 31st March, all rural banks had converted to community banks. Then we have the microfinance banks also, which is coming from the savings and loans, the deposit-taking microfinance, and then the others operating finance houses and stuff coming together as the microfinance banks. Now we have the credit union also, and then the others which are more or less regulating themselves, the last mile providers. So we have 4 tiers coming together under Apex Bank. So Apex, the ARB will be taking off. No more Association of Rural Bank. Now becomes Apex for all the segment. Right, so that is how it's going to be. So Apex is now going to have an expanded mandate. So whatever we are doing, we are just expanding to onboard all these 4 tiers into the market. So that's how it's going to be structured. Right.
Mr. Moderator, for the purposes of education, we want to expand the reform. The reform, you might be here and you have an account with savings and loans. You have investment with some of the finance houses. You may have investment with some of the, how do you call it, microfinance. But for the microfinance, because they are small, people don't actually know them as much because of mom and pop nature. But we are putting all of them together. Now we are taking the savings and loan, the finance houses, and the rest, all of them together to form, to make up these reforms. Like he said, the savings and loans, and then all the microfinance institutions finance houses, we are going to put them together as microfinance banks. That is, if you can raise the 50 million as an old member or 100 million as a new entrant. Then you come to the community bank. The community bank have said that it is 5 million and then 10 million. And then we want people to be involved as much as possible. But the credit union is also part. The credit union, we are going to put them into 2 tiers. The big ones will come under the regulation of Bank of Ghana, and the small ones will give them to the what he called the last mile providers. That is, APES will take care, including these susu companies, etc., money lending, all those ones. We put all of them together, and then APES will supervise them. So the reform is going to make a big difference. And now, once you are here, we want you to have the message and have it well. So when you go and people are arguing, you should be able to add or subtract. And when you are adding, it is positive. And when you are correcting, it is also positive. And that is what we want. But the reform, trust me, is going to change the dynamics of the development and our economy. Thank you very much.
Thank you, sir. So I'm here preempting 2 questions that might come up. On the one hand, since the shareholding structure is usually of people in the community, how raising this capital, how would that work practically? And secondly, and this is more to the regulator, why is there that distinction between the capital requirements for existing entities and new entrants? Because it's double, it's 100%. It's not 10% above what existing entities have to raise.
So your question, why the capital difference?
Yeah, why the capital difference, and considering the shareholding structure.
Okay, the shareholding structure. Thank you very much. As far as the shareholding structure is concerned, nothing has changed. We still want the bank to be owned by the community. For that one, we have ratios that we have assigned to all the communities. If you have a community bank, we are saying that the community should own at least 20% of the shares. 20% at least. You as an individual, for the reforms, you can own 25%. We as a group can own up to 40%. And you as a corporate body can own 50%. That is how we have categorized it. So the community nature of the rural bank has not been taken away. And then also the association, he didn't mention the association of rural bank that used to be, will now be the association of the community bank. And nothing is changed. So that is how the whole process is. The second question being the difference. Okay, just to say that if you are now coming into the space, the community banking space, you have to be robust enough. You have to be resilient enough. So somebody who is practicing already and has everything in place already, in motion, you can't compete with that person. And that person know where to go for what. But you, now that you are coming, you may do your research. But you are going to buy this, you are going to set up this, you're going to own this. Before you finish, trust me, that 5 million will disappear. And so it is a condition that new entrants bring 10 million, and then if you are the old practitioner, increase your share to 5 million Ghana cedis. And that one, it is not because you are new, you are old, but because you have to be robust enough as a new entrant to be able to perform your banking operations. Thank you.
Thank you very much for the clarification. It's 2:40. I'm hoping we can wrap up in 10 minutes, but there are 3 key areas. 1, digitalization. 2, agriculture. And 3, partnerships. So I'm hoping we can just... So starting off with digitalization, there are 2 sides to this. On the one hand, we've seen the tremendous spread of something like mobile money. Has the spread of mobile money especially made the role of particularly the financial inclusion role of community banks less relevant? This one, I'll start with you.
Okay. So I don't think it has. We shouldn't look at it in terms of competition. It should be more of collaboration. But matter of fact, if you look at the Apex Bank 2024 financial report, they mentioned that the remittances levels have gone down drastically. They also haven't mentioned that deposits have gone up quite significantly. And a key part of it comes from the mobile money bits as well, deposit bits as well. So and I also spoke at the beginning that financial inclusion is not only about access, but how can we improve their lives? And so if, for example, Momo has maybe insurance embedded, savings embedded, how can some of these community banks then partner with some of these fintechs, not just Momo, to make it easier for the client? Because remember that the client is not looking at A or B. What they're looking for is solutions, not just Rural Bank or Momo. How can you combine these 2 to make my life easier? And so for the RCBs and the Apex Bank that are here, I think for them, it's really about how can we come together, partner, and make the solutions easily available and relevant to the client.
Okay, so going to the practitioners, how has your digital strategies evolved, particularly over the past, say, half decade? What technologies are you introducing?
Thank you very much. I think it's been very fantastic over the past 15 or 20 years when you look at in terms of the penetration of IT. To date, I can say that virtually every solution or every product and services that you can easily find in the, let me say, universal banks, I can say that you can easily access that within the rural banking system. I mean, through GIPS, we participate in almost every single financial solution that has since been deployed. Take, for example, eSwitch, cards. Rural banks have played a very instrumental role, and we are among the largest in terms of cards, issuance. Take, for example, checks clearing, which is done almost within a matter of hours. To date, you can move funds from your account from BESFA to Bank of Ghana, Universal Merchant Bank, EcoBank, anywhere, real time. Within 5-10 minutes, you are able to access that. And so that is what the customers want, that convenience. Gone are the days where a single transfer, moving of funds from one entity to the other, can take you 2 weeks to access that. Now, that is really not the case. You can do virtually everything, paying school fees, buying of forms of these universities and everything. Even the mobile money, as we are speaking, like my big brother indicated, it's about collaboration that we see rather than competition. And it is for the reason that in the last 6-7 years, we've been able to integrate the mobile money system into our operation 100%. Today, our customers are able to do push and pull from account to wallet on any of the telecos, and he or she is ready to go. So as a result, definitely with that, it gives the convenience of access very cheaper, and that's all about financial inclusion. And so for us, we see ourselves being able to partner with them, and then it helps move the vast majority of the unbanked, bringing them into the banking system. And for us, I see that it helps us, because if you look at even statistically, in terms of deposit mobilization, if it were that it is actually affected our operation, then we should be able to see some drop in the numbers. Rather, we are doing deposit in hundreds of percentages year on year. And you have these customers being ready to keep their money, knowing very well that even at midnight, I can just get up, tape my phone, move my money from my account with BESFA, wherever, any rural bank, and I'm ready to go. So that has been the kind of let me say, IT savvy that the rural banks have become. Yes, we would not say that we have that kind of sophisticated systems like the universal banks, but the few or the little that we need to be able to serve that vast 80% majority of the population, I believe I can say that we have been able to deploy what is enough to provide them that kind of convenience and then the easy solutions that they need for a better life on a day-to-day basis.
Interesting. A round of applause. Doc, let's hear from you. Should we be expecting your app on the App Store or Play Store very soon? Doc.
Chike, let me quickly touch on something very briefly on the regulation and the reforms. If you're not careful and you're new to community banking, you may think you're talking about 5 million capital. It's like some small, vulnerable financial institutions. This is absolutely not the case. We're very big and we do a lot of good things. And let me assure you that the regulation that the Bank of Ghana is pushing is absolutely in the interest of the entire industry. It's going to make us better. We already trusted and it's going to improve the trust. Now back to the issue of digitization. Most of the time we think that once we talk about financial inclusion, then it means that you have a Momo wallet or you have a bank account. But financial inclusion moves far beyond that. Who is propelling the micro, small, and medium enterprises in our country today? How many of our commercial banks are bold enough to give 500,000 cedis without collateral, 200,000 cedis without collateral, 100,000 cedis without collateral? Do you know the customer? Do you know where they stay? Do you know where they go to funeral? So these are the community banks who have lived with them. They have understood them, and then they have integrated all the knowledge they know about the environment into their risk assessment modalities and are able to take this risk. Beyond Momo and all of that, yes, it's doing a lot of things, and because, like the sponsor said, we're not competing, we have already collaborated, and we're already doing push and pull and allowing them to integrate directly to their bank account, all of that. But I'm saying that it moves far beyond that. The risks that we are not able to take about agriculture, who is taking them now? And these are the things that when you talk about rural and community banks or community banking, that's what we're talking about. And let me tell you something that those of you who talk about a lot about investment, take this. Go and look for all the rural banks in the country and check how much dividend they paid per share over the past 5 years. And you know where to put your money. Year on year, we are returning more than any or most of the big institutions you know can return. And so when you talk about capital raising in community banks, this is a good area. I just mentioned to Paul after his presentation what our dividend was. And the first thing is, how can I buy shares in your bank? And these are a lot of opportunities in these areas. And I think we need to all be aware of this. Thank you very much. Your time is limited, so I need to pass this information.
Sorry, Mr. Goose, sorry, let's hear from ARB Apex on digitization. Yeah.
Oh, okay, all right, thank you. I align with all the thoughts. I mean, no competition. When mobile banking or mobile money came, I mean, it was straight to the entire banking system. Until we realize that it is the norm of the day and therefore we have to buy in. Now is collaboration, as it was said. I mean, for Apex, we come out with a lot of product. All right, we liaise with GIPS, and then we also have our own product. For example, USSD, which is *992#. If you do it now, it will prompt you that select your rural bank. I mean, that one will have to be changed to community bank, where you can sit here and just withdraw money from your account easily. Yesterday, I was at an institution. I had to pay something. I didn't have any money on me. And I asked them, can I pay by Momo? And they say, no. I said, you are far, far, far behind. Because I was just going to pull from my account. So that's how far we have gone. Every rural bank or community bank, when you go there, you'll be able to access your funds. Before, it wasn't like that. And now we have even introduced NRT, near real time. You go to any of the community banks and you want to transfer money to any, even the commercial bank, that is done. So we have leveraged the platforms of digital what we call transformation, and it is good for us. And I don't think we have to lay behind, we have to support it. Yeah, so that's what I will add to that.
And that has to do with even recently, in the last 12 months, the agency banking, where to date we have close to over 4,000 agents scattered every part of the country, where they are able to access basic financial service through their account, through these agents, dotted in the hard to reach, the last miles. So for me, it is something that we've been doing, and then we are also, collaborating with Apex to see what it takes in terms of the investment. Luckily, we are privileged to have some support coming from donor agencies with the help of Bank of Ghana, the ministry, and Apex to push some of these agenda, because it's really going to the heart of the development of our people. And so we shall continue to be able to leverage that, look at whatever investment that it requires to maintain and even upscale, so that we can always be in touch as far as technology is concerned.
Let me also add that if you look at the dynamics in the digital space, even before Momo became Momo, IPES was doing that kind of transfers. IPES Link, they had iTran and those things before Momo became what it is today. So I can assure you that when you come to the digital space, the community bank are always on top. Because we as regulated, we regulate both the community bank and Apex Bank. And before you know, we have picked up the information. These practitioners here, some of them also do a lot of research, so they can see what is coming. And so they are always, and we are always on them. If you don't do this, you'll be left behind. Even these reforms, we are alerting them that because of the use, because what we call the Gen Z, we are making sure that, for me, my children, if you give them physical cash, they are not interested. They want the digital. So you can't survive in this dispensation if you don't modernize your digital space. And so they are, like they said, that is exactly what it is. And so we are making sure that nobody will be left behind, and we are always welcome on board. Thank you very much.
Thank you, Doc. I don't know if you noticed. Whilst my hypothetical $100,000 might not be there, you might have heard Doc talk about collateral-free 200,000, 300,000, 500,000. So I don't know how many of us will be relocating to his community to see if we can access that. So let's just conclude with this. I don't know how much time we would be able to. Perhaps let's give ourselves 5 minutes. Agriculture. RCBs, as they were known, they were closest to the farmers. We know that historically, even though the agri sector is a very important one, it hasn't received as much funding, and we have to be realistic. Risks exist, and you have fiduciary responsibilities. You cannot throw money at things that you don't expect to recoup your money from. How are we going to proceed? Now that you're becoming community banks, are you ignoring the farmers and agriculture? What's the strategy moving forward?
Let me add one thing before the people on the ground actually do that. So from the commercial banking space, I think for us, we really struggle sometimes with the last mile penetration. So how can we partner these community banks to make it easier for some of these lending to be made? So that's what I would say to conclude. More deep partnership between the commercial banks and the RCBs, yes.
Very necessary.
Thank you very much. So what I can say is that fundamentally, looking at where we are located and our clientele base, it is highly impossible to say that you cannot finance agribusiness and agriculture. Take, for example, my bank. BESFA is an acronym for Boku East Small Scale Farmers Association. It is actually a bank for the farmers. It is the farmers that came together to kind of like institute the bank. And so to date, and we've been 42 years to date, agribusiness and especially financing smallholder farmers, take almost 42% to 45% of our total loan book. And so, looking at where we are, what I think has helped and has worked for us is our proximity to the farmers. Having understand this business over the years, they understand that the entity is for them. And so it is more like supporting one another. We need that savings that can also be reinvested within in the same group of people, especially the smallholder farmers. Most of the institutions or the commercial bank you hear they finance agri, you go, it's usually within the, let me say, value chains. You take transportation, marketing may take substantial percentage. Hardly do you see them go to the, how do you call, small-scale farmers, the smallholder farmers. So I will tie it to my big brother's addition. For us as community banks, what we need to do is to collaborate with most of the universal banks. And I remember we've done that a couple of times in my former bank with EcoBank. Looking at where EcoBank is, they cannot come to, say, Fumbisi in the Upper East region to support that large pool of farmers in the valleys there that are producing, large number of rice. So EcoBank had to come to us, look at, okay, how much will it cost us to do this business? We can do this at this margin. You can also add this margin and then provide that support to the farmers. Because of our closeness to the farmers, we have a team that are capable of what? Monitoring at a cheaper cost than EcoBank would have ordinarily get out from Tamale and their officers to come there to do that monitoring. At the end of the day, it's been a successful kind of relationship over the years. And I believe these are the kind of collaboration that we need. Of course, Apex has been supportive when it comes to that, looking at going into the market, sourcing for cheaper funds that will come to the farmers. But ultimately, what I want to add is that for this agri-business and support to succeed, government policy is very important. Sometimes most of the challenges our farmers face is not really because of the access to capital, but because of other things that is outside the reach of the banks. Because if you are experiencing post-harvest losses arising out of non-availability of storage facilities, this can become a challenge for a typical community bank because that would require a very huge investment to be able to. And so, like the cost of inputs and other things, these are things that really hit the average farmer when it comes to the production. And at the end of the day, you get them stranded. Like what has happened last year. They have had a very successful season, only for them to be struck by what? Markets, and then the prices of goods and services. And to date, one can say that they seem to have been neglected to their fate. And as it stands now, we don't even know. Most of them are complaining that they might not even do the same numbers as they used to do, which is also a threat to food security and sustainability of our own livelihood. So there is a need for us to be able to, all stakeholders really need to look at these things holistically and see how and the best way we can approach agribusiness and farming and the support that we give to that particular sector, which from all the presentation is by far the most critical and most important aspect of our sector. We neglect it, it is at our own peril. Thank you very much.
Okay, Doc, please hold your thoughts. Let's see if there are any questions, and then so 3 questions. Okay, I see 2 hands. Okay, so we'll take those 2, and then we seek to conclude. Oh, so 3 questions. Sorry, is there a microphone behind? Okay. So please, your name and straight to the question.
Francis Osukobia. The first one is a plea to the organizers. Looking at the room, we have executives here, but we are talking about inclusion. So I want to plead with them if next year or in future event, we can bring some of the young people, those who have graduated from university, the secondary school students, to come and learn about some of these technicalities, because the next 20 years, they will come and take these positions. And if they don't understand the data asset tokenization, how can they manage the country? Then my question goes to Alaji. You were talking about the ecosystem in the mobile money. Now that it's not a competition, but it's a collaboration. So I want to ask, the mobile money fraud, looking at the figures, is always rising. 2025 alone, half of the year, 14 point something million went into these fraudsters. How is the ecosystem players helping to reduce the mobile money fraud? Thank you.
Okay, thank you. So, next question.
My name is Julius Akpe. I work for SN Young. And so I'm a transaction advisor, and I'm concerned about one key development in your space. My question concerns recapitalization. So currently, we expect the recapitalization of the rural banks, and you're increasing the capital requirement. I want to understand from regulatory perspective, if you anticipate a wave of forced regulatory driven M&A in the bank in that particular sector over the next 12 months, or you expect the existing shareholders to be the one to contribute the equity towards the recapitalization of the various banks there, given that a question was posted as to whether those shareholders can even be able to mobilize the money. And so what are we expecting? A wave of forced regulatory driven M&A, or we are expecting equity injection by existing shareholders?
A wave of. Okay. I think that'll be for you. And then a final question.
So I'm Jerry Boachidanka. I work with the Ghana Stock Exchange. So Alex mentioned that a lot of people are making money by investing in the rural and community banks. But as I stand here, how would I know? And that is why the Ghana Stock Exchange has introduced the over-the-counter market. This is a platform that is well designed for the rural and community banks, where they can be buying and selling of shares. It's a regulated platform that is very visible, so that you don't go and meet somebody behind somewhere. Everything is just visible. We have started engagements with ARP Apex Bank and then BOG, and I'm looking forward to this thing coming to fruition very soon, so that all of us here, once there's a regulated platform, we can all invest in the rural and community banks and can drive Ghana's economic growth. Thank you.
You're truly the head of marketing at GSE. We'll come for our commission. So to the questions.
Okay, thank you very much. I think the question has to do with the mobile money fraud and how can we, as players, support. I believe the key to this is about education, because most of the people who have fallen victim of some of these things, normally we have some of these forces playing out of their ignorance, and then they are able to succeed in defrauding them. And so we, at our level, certainly have been investing in customer education, complementing what MTN and other telcos are doing. And then I think recently, EcoBank, even as we sit here, we've seen the commercial being played where people are being, educated to make sure that we protect our PIN and whatever, so that we are also careful with whatever that we can, because certainly that is the challenge with technology. The more you advance, the more you become or you get exposed to some of these fraudsters, and if you are not careful, that can hit you hard. And so I believe customer education is the only way that can actually help us get to tame, reduce, if not fully eradicate, the losses that is coming out of that. Thank you.
Okay. Also to give some assurance to everyone, we have also adopted with the cooperation of the ARB Apex Bank a very strong cybersecurity measures. We are fully complying with the Bank of Ghana directive on cybersecurity, just like any other commercial bank is complying, just to make sure that once you are moving money between your bank account and your wallet, you are not unduly exposed, and it will not allow people to take advantage of you. So the environment is also very much controlled, just like any other regulated environment is controlled.
Let me just add this. For fraud, it's been there since creation. If I don't know if you have been in the rural areas before, those days, sometimes when you are just walking, you see money on the ground and you pick it. Now people learned lessons. That one, they were just losing it, and they put the money into their pocket. You come to Accra, people will dip their hands into your pocket, take the money, and you will not see. It means that wherever money is, the people will chase you. So for fraud, it cannot be away from us. All that we need is to be very, very careful. One thing I've realized about this fraud issue is when it hits you, you find it difficult to tell anybody. Because you'll be seen as unwise. But let people know. Let people know. A lot of us have really experienced it. So it is not the bank which is not really tightening its securities. It is the individuals holding the mobile phones, we the customers. So it rests on us. It's a national assignment for us to fight this fraud. So let us be careful when we are dealing with people that we are not really aware of. Even when it comes to Momo, you want to buy pizza. Now, if you are ordering pizza online, you are in trouble. So it is on us, not on the banks, on us to really be careful with this process because they will always chase us. But as he said, for Apex, we have come out with the SOC, which is centralized security monitoring system to beef up cyber security for all the rural banks, especially with the coming on board with the other sectors. So we are beefing up, but then it still rests on us, the individuals. Right, thank you.
Okay, Mr. Oklu.
Let me just add that the question is a very good one. And just to add that, when it comes to risk management and then systems and controls, we are very particular about this. And so we are making sure that, yes, like he said, fraud may happen, but as much as possible, we have to minimize it. And so we are doing all that we can as Bank of Ghana to make sure that if this is the product you are interested in and you want to promote, we'll ask you, have you studied everything around it, including the risk? How are you going to control this risk? But some of the fraud are generated from inside. That is what the problem is. So once you keep in check, I know of a particular one of the rural banks, the community banks, the MD sits somewhere, the chief executive officer sits somewhere and monitors everything on the screen. So intentionally, he will come and ask you, why have you done this? What is this? I don't understand. Walk me through. So once he was doing that, up to date, you can complain of everything, but that institution, no fraud. So there should be a way out. And that Bank of Ghana is doing all that we can to make sure that when it comes to fraud and systems and control and risk management, and the community bank will be in charge and will be in control. Thank you very much.
Right, sir. So the question on the...
So your question is about who is going to provide the capital. Now that we are increasing the capital to 5 million and 10 million. That was the question. I can assure you that as we sit here, we have more than 40 community banks meeting that threshold and above. We have more than 40. The community bank, when the capital was increased, the chiefs are involved, the opinion leaders are involved, the MPs are involved. Nobody wants to lose their community bank. So they are doing all that they can to provide the 5 million. So the 5 million will be provided by the people in the community. Thank you very much.
Thank you. So also soon we've come to an end. So we just hear your final thoughts, 30 seconds. Desmond, I'll begin with you.
Thank you very much.
Desmond, yeah. So then we come to...
So just lastly on that, I think when those fraud incidents happen, it's important to report to the cybersecurity authority. It's really important. My final thought is that these guys play a really important role. And for us, financial inclusion is not just about the access, but how they can improve their lives. And so, and we welcome the reforms from the central bank as well. So let's just work together. We encourage as many as that can merge together to become stronger institutions to also do same. So they can have a more robust and a very trustworthy system that we currently have in Ghana. Thanks.
Okay, thank you very much. My final takeaway has been the final submission from the presenter from Fidelity, who remarked that the resources to develop this country in the next 15 years is actually in the hands of the vast majority of the people that we have not fully go down to serve. And I believe he was speaking directly to the rural and community banks, which I'm sure it is one of the key things that when we go back within our policy and then strategy, we will look at how we can also support in getting that kind of development for this country coming even earlier than the 15 years he mentioned. Thank you.
Thank you, Doc.
Yes, Chige, the fact still remains that financing the micro, small, and medium enterprises is the biggest of all their problems. All the surveys, all the research point to it to be the biggest of all the issues. Meanwhile, we as a country are saying that that is also the engine of growth. So we're pretending to be financing, but we're not financing because we see risk. And by any convention, no bank will approach the risk. They will move away from the risk. Same with agriculture. And this is where a trusted last mile infrastructure is operating. Trusted over 50 years operating in this area, knowing the people, interacting the people based on knowledge, relationship, and understanding, taking the risks. But we need to do more than we're doing. Reforms are good, going to propel us with higher capital to do that. But we need collaboration, we need partnerships. We need the commercial banks to come along. Let's share risk, let's co-lend, bring your technology, bring your infrastructure, let's partner and do some of these things together because you are afraid to go there, but you need a reach. We are there, we need what you have. And I think with this kind of arrangement, we can push further and we can do the work better. Thank you very much.
Thank you.
All right, thank you. So finally, the story of community banks have been told. The question that nobody was able to answer, now if it comes as an exam question, I think you get 100%. You understand the role of rural or community banks in driving financial inclusion. If you go to my hometown, which is not a village, there's no universal bank there. If we didn't have community banks, it means all my people would have been cut off the financial inclusion agenda. So it means that today we have learned that there are levels of poverty. Community banks are reducing this level of poverty. So it's a national agenda. We are drawing on the government that we should give incentives to the sector. One core incentive is the corporate tax. We have drummed this. Now we are on your platform. Drive this for us. Community banks used to pay tax at 8%. Now we are paying 25% corporate tax. If government can consider the national agenda, the critical role that the sector is playing to give that incentive so that the sector can still give back to the community and improve and resolve the issues of poverty for us. That's our message.
Thank you very much. I could see Mr. Okulu smiling.
Thank you very much. Let me say that when it comes to the issue of the community bank, it is the heartbeat of the government, and it is the heartbeat of Bank of Ghana. That one, there's no argument about it. If you could remember, the previous cleanup, no community bank was touched. It is because it is the heartbeat of the government. And so we are making making sure that this space is always protected. And I want to add that the reform in progress is here to make the community bank stronger, robust, Ghanaian-owned institution. If you go to a country like Kenya, one community bank is bigger than commercial bank in Ghana. When it comes to the credit union and their community bank, huge, with a lot of customers. We want to get there. You can also be an owner or part owner of the community bank because it is driving the development, the economic development of the nation. So don't be left out. Spread the good news that the community bank will make Ghana going forward. For us, we are out of the system almost. By you and you, you and you have to be able to be part of this agenda. Thank you very much.
Thank you very much, ladies and gentlemen. I trust that it has been quite informative. Perhaps we could print some certificates with Community Banking 101 and hand them out to go. But let's thank you very much for your time, your attention, your participation. Let's keep the conversation going online. Speaking of online, head of events, he's out. He would have proposed an X space or something to keep the conversation going on. We have an entirely separate event for community banks. But thank you all very much. Lunch will be served soon.
And now let's have you take a picture, a group picture quick. So ladies and gentlemen, all too soon, we've come to the end of the Money Summit 2026. A round of applause for yourself for making it till now. Yes, I understand the energy. The lunch is coming. So on behalf of the Business and Financial Times, our sponsors, EcoBank, Fidelity Bank, Stanbic Bank, and media partners as well, the BFTonline.com, TV3, CT 97.3 FM, Asasi Radio. We say thank you very much for participating and thank you for staying till now. And to meet next year, please do stay connected and always look out for your business information on the Business and Financial Times, the BNFTonline.com. Connect with us on our X Spaces, the BFT Ghana, and I'm Juliet Selassie Etepe. It's been great doing this with all of you. Enjoy your lunch and stay blessed.